Hello all my dearest students of Full English. I hope you all are doing good. I hope your studies are going great for your upcoming exams of May 25 and November 2025. So today we are going to start with our revision, comprehensive revision for May 2025 and November 2025 for the chapter of assessment procedure, in which there are a lot of amendments. There are a lot of amendments in income escaping assessment. There are a lot of amendments in search and seizure assessment. There has been reintroduction of block assessment after 21 years in Finance Act 2024. So we are going to revise all of them comprehensively so that you have your hands hold on this beautiful topic very easily. So without wasting any further time, again I would like to say I'll be putting the entire revision video of CA Final May 2025 and November 2025 in full English as well, along with the full Hindi and English mix. So I will be uploading in both the languages, so don't be scared about all those things. I will be uploading. I might be slightly late in uploading the English language, sometimes, not always, but you have to be patient with me. Okay, so let's start with our next topic. We have already done the revision of business and profession, profits and gains of business and profession. You can watch that video on our channel. Now we are heading ahead with our second video, that is assessment procedure in full English. So let's start with the first section over here. First, we are going to talk about the provisions of return filing under the income tax law, because before going to the assessment, we need to know the basics of the return filing first of all, and then we can go ahead with the return assessment procedure sections which are there in this particular chapter. Now, the very first thing that we need to understand over here is return filing, that is 139.1, which is one of the most important section in the entire syllabus, which has come so many times at different places under the entire income tax law. Now, this section talks about two things. Which two things? First of all, this section talks about who is obligated to file the income tax return. First, obligation is on whom. Second, if you know who is obligated, then we need to define what is the due date of filing of income tax return. So there are two questions that we need to answer in this particular section. First thing is who is obligated. So who is obligated? For that we have created four categories under the provisions of 139.1. In first category, there are two people who are always obligated to file the income tax return. First, a company is always obligated to file the income tax return. A firm is always obligated to file the income tax return irrespective of the profits and losses. Whether a company or a firm, which will also include LLP also. Whenever I say firm under the income tax law, it will also include LLP, except few sections like 44AD, ADA, etc., where LLP is not included in the definition of firm. Otherwise, firm always includes LLP also. So a firm and a company and an LLP will always file return irrespective of their profits and losses. What about others? What about the individual? What about HUF? What about AOP, VY? They are liable to file income tax return if their gross total income is greater than the basic exemption limit. If their GTI is greater than basic exemption limit, they are liable to file the income tax return. Otherwise, they are not liable to file the income tax return. So GTI means what? Your GTI means your income should be computed before two items. Which two items? You should compute your income before. GTI in this section means GTI before chapter 6A and GTI before exemptions under section 54, which are given under capital gain. Suppose a person is having a long-term capital gains of 10 lakh rupees and he is claiming an exemption of 10 lakh rupees under section 54. So you have to check before giving the exemption. So before giving the exemption, what is his income? It is 10 lakh. Is it greater than the basic exemption limit? The answer is yes. Therefore, he is liable to file the return under the income tax law. I hope it is clear to all of you. So let's move on to the next category, category 2, which is very specific to certain assessees who have their assets outside India, or who have their financial interest outside India, or who have a signing authority in a bank account outside India. So if you have a foreign asset, or if you have an interest in foreign entity, or if you have a foreign bank account in which you are a signing authority, you are liable to file the income tax return irrespective of your total income. Even if your total income, if your income is less than the basic exemption limit, you are liable to file the income tax return. Now, who are responsible over here? It is only applicable to resident and ordinary resident who are beneficial owner or beneficiary of any asset outside India, or financial interest in any entity outside India, or signing authority of any bank account outside India. They are liable to file the income tax return. Sir, what do you mean by beneficial owner or beneficiary? Beneficial owner means I am the owner, I have paid for the asset, then I am liable to file the return. If somebody else has paid for the asset, but I am taking the advantage of that asset. If somebody has paid for the asset, but I am enjoying the rental of that asset. If somebody had paid for asset, but I am enjoying the interest of that particular asset, then in that case, I will be called as beneficiary. So the law has put responsibility on both beneficial owner as well as the beneficiary to file the income tax return as per this particular category. Now let's move on to the third category. The third category is also applicable to other than company and firm, because we all know that company and firm are always liable to file the income tax return. Therefore, the third third category is also applicable to other than company and firm. Therefore, what is there in third category? In third category, there are three different kind of people who are liable to file the income tax return. First, if you deposit more than 1 crore rupees, if you deposit more than 1 crore rupees, not exact 1 crore, more than 1 crore in a current account, which is opened in a bank or a cooperative bank, you are liable to file the income tax return. Okay. So if you deposit more than 1 crore rupees in a bank or a cooperative bank in a current account in entire financial year, you are liable to file the income tax return. Second, if you incur more than 2 lakh rupees for yourself or for any of your family members or friends or relatives, anybody for foreign travel, then you are liable to file the income tax return. If I incur more than 2 lakh rupees for a foreign travel for myself or my parents or my friends or my relatives, anybody, then I am liable to file the income tax return. Third, if you incur an expenditure on electricity of more than 1 lakh rupees, then also you are liable for what? Income tax return. You are liable to file the income tax return as per this particular category. Now, fourth category. In fourth category, there are four different kind of people who are liable to file the income tax return. First, if you are doing business and if your sales, turnover, gross receipt, whatever it is greater than 60 lakhs, not greater than equal to 60 lakhs. It has to be greater than 60 lakhs. On exact 60 lakhs, you are not liable to file the return. It has to be greater than 60 lakhs. Be very careful. Similarly, if you are doing a profession and if your gross receipt is greater than 10 lakh rupees, on exact 10 lakh rupees, you are not liable to file the return. It has to be greater than 10 lakh rupees. Okay. Third, if you are a resident and if you are a senior citizen, both the conditions have to be fulfilled at the same time. If you are a resident as well as senior citizen, both, and if your TDS and TCS in the financial year is greater than equal to now. That's the reason I was saying in the previous 2 points, it was greater than 60 lakh, greater than 10 lakh, but in the third point, it is greater than equal to 50,000 rupees. So if I am a senior citizen, if I am a resident, and if my TDS and TCS is 50,000 or more, then I am liable to file the income tax return. And for others, other means who are non-residents, who are not resident, other means who are less than 60 years. For them, if the TDS and TCS deducted is how much? It is 25,000 or more, they are liable to file the income tax return. I hope it is clear to all of you. And last but not least, if you are opening a saving bank account, and in the saving bank account you deposit what? 50 lakh or more. If you deposit what? 50 lakh if you deposit, or more than 50 lakh you deposit, you are liable to file the income tax return as per this particular category. I hope it is clear to all of you. Okay. Now let's move on to the next part. Next part of the same section, that is exemption from filing ROI. There are few people who have been exempted from filing ROI. Now, who are those fortunate people? Those are non-resident and foreign companies. Certain non-residents and foreign companies have been exempted. Who have been exempted? Who have invested in the investment fund AIF. Who have invested where? There is a non-resident or foreign company who is investing in AIF. AIF means Alternative Investment Fund. And that AIF is located where? In IFSC. In IFSC. And from there, from the AIF, they are earning some income. And on that, the AIF has deducted TDS as per 194 LBB. And they are not earning any other income. There are a lot of conditions over here. So if a non-resident or foreign company is investing in AIF, which is located in IFSC, from there they are earning income, the TDS is deducted under 194 LBB, and they are not earning any other income from India, then they are not liable to file the income tax return under which section? Under section 139 subsection 1. But, pay absolute attention. But if the department wants, department can send them a notice under 142(1) or a notice under 148 and tell them to file the income tax return. They are not exempted from all the provisions of the income tax law. They are only exempted from section 139 subsection 1. So if the department tells them that you have to file return under 142(1), then you have to file. So if the department tells that you have to file the return under 148, then you have to file the return under 148. You don't have any other option. Okay. Now let's come to the second part of the section. As I've told you at the beginning, there are two parts in this section. One is about obligation to file the income tax return, and second is about due date of filing of income tax return. Now let's talk about the due date of filing of income tax return. What is the due date of return? There are three dates. One is October, one is November, one is July. Let's talk about October first. Who will file in October? Remember, a company will always file in October. Company will always. For company, there is no July, there is always October. Yes, if a company is engaged in transfer pricing, then obviously it will file in November. For transfer pricing assessees, the date is always November. For others, it is October or July. Okay. Now pay attention, please. So company will always file in October. What about others? Others, individual, HUF, firm, LLP, AOP, BOI. Others will file in October if they are liable for audit. Audit under which law? Audit under income tax law under 44AB or any other law. If you are liable for audit under income tax law or any other law, then also the due date will be October. It's not that only if you are liable for audit under income tax law, then you will file in October. Not like that. If you are getting audited, say under trust law, or if you are getting audited, say under LLP law, then also you will be filing the return in the month of October only. I hope it is clear to all of you. Third case. What is third case? I am a partnership firm or I am an LLP, and if my books of accounts are getting audited, then my books of accounts will get finalized by October. I will file return in October. So in that case, my partners will also file a return in October. So if a firm is liable for audit, then even the partner of that firm, working and sleeping, both the partners of that firm will also file the return in the month of October only. This is what the third point has to say. Now, who will file in July? July, any other person who is not coming year and year. If an assessee is not liable for transfer pricing, it will come in July. Plus an assessee is not liable for audit, it will come in July. Okay, I hope it is clear to all of you. Now, one more thing. If a firm is liable for transfer pricing, then when will the partner file the return? So if a firm is liable for transfer pricing, then the firm will file in November. Therefore, the partner will also file in November. That is mentioned over here. You can check in below with 2 asterisks. And one special provision which is applicable to certain states and union territories. Let me explain you that provision, which is given under section 5A. Section 5A is applicable to people who are resident of certain states like Goa, Diu and Daman, Dadra and Nagar Haveli. If you are a resident of these states, there is a special law which is applicable in your state that is known as Portuguese Civil Code 1862. What does that law say? Even today that is applicable in these states and union territories. Portuguese Civil Code says that whatever husband will earn, 50% has to be given to wife, and whatever wife will earn, 50% has to be given to husband, except salary income. Apart from salary, all other income has to be segregated between husband and wife equally. If I earn, I have to give 50% to my wife and wife will pay tax on that. If wife earns, that 50% will be mine and I will pay tax on that. Except salary income. Therefore, just imagine, that is given under Portuguese Civil Code and that is also mentioned under section 5A of the Income Tax Act. Now let's just imagine one thing, that husband is residing in Goa, wife is also obviously residing in Goa, they are resident of Goa, and husband is a partner in a partnership firm and the firm is getting audited. If the firm is getting audited, husband will also file return in October. Now 50% income of husband is of wife's income, therefore wife should also file in October, yes or no? That's what this particular point has to say, check it please. So in case of these states, their husband is filing in October, then wife will also file in October because the 50% income is of wife only, correct or not? I hope it is clear to all of you. So here we complete section 139 subsection 1. Now what are the consequences of not filing the return on time? There are multiple consequences, but we have put some of the important consequences over here and we are going to do detailing of all of them one by one in a while. Like some of the important consequences which are over here are as follows. PGBP and capital gain losses you cannot carry forward if you file the return late. Then 234 interest will be imposed. 234F fee will be imposed. Best judgment can be done against you. 142 subsection 1 clause 1 notice will come against you. Now all these things we are going to see in a while in this chapter only. Most of the things will be covered in this chapter only. Last, all the profit link deductions you cannot carry forward. You cannot carry forward. You cannot take a profit link deduction by filing a late return. You cannot claim ATIA, ATIB, ATIC, ATID. All these things are not allowed if you file a late return. It is not possible. If you want to claim all these things, you have to file the return on time. So let me talk about all these consequences one by one. I will talk about 2 consequences as of now. First, 80AC. This section says that there are 15 profit link deductions under income tax law. If you want to take deduction of this 15 profit link deduction, you have to file the return on time, or else these 15 deductions will not be allowed to you. These 15 deductions cannot be allowed by filing a belated return. It is not allowed. You have to file the return on time. I hope it is clear to all of you. In this, one more section is added. Later on it will come. It is not added here. Even 10AA cannot be allowed without filing a return on time. If you want a deduction of 10AA, that is SEZ deduction, you have to file the return on time. Otherwise it is not allowed. I hope it is clear. Next, 234F. Fee for late filing of return. If your total income is up to 5 lakh rupees, you will be liable to pay a fee of 1000 rupees. And if your total income is more than 5 lakh rupees, and if you don't file the income tax return, you will be liable to pay a fee of how much? 5000 rupees. I hope it is clear to all of you. Now let's move on to the next part. That is returns by certain special assessees. Now there are 6 special assessees for which there are special sections. What is so special about these assessees? These assessees will always file return in October. Why? Because they are liable for audit. They are liable for audit. All of them have to conduct audit mandatorily. Therefore, their due date will always be October. Who are these special assessees? First, 139(4)A, charitable or religious trust you are. So when a charitable or religious trust will file the return, if the total income before giving the exemption is greater than the basic exemption limit. Suppose the total income of the trust is 10 lakh and after giving the exemption it becomes 0. So you have to check the income before giving the exemption. Before giving the exemption it is how much? It is 10 lakh. You have to file the return. If you don't file the return, you will be penalized with two things. First, penalty under 272A of 500 rupees per day and fee under 234F of 5,000 or 1,000 rupees as the case may be. Then political party 139(4)(b). Political party is also exempt under 13A. So again you have to check if the income before exemption is greater than basic exemption limit, you are supposed to file the return. If you don't file the return, only fee will be imposed. Penalty under 272A is not applicable here. Third, certain institutions which are covered exempt under section 10. There are a lot of institutions who are exempt under section 10. We are going to learn about them in today's session only, in today's revision session, like 1023C, etc. So if they want to claim exemption, they have to file the return first of all. And again, the same thing, their income has to be greater than the basic exemption limit. Before giving the basic exemption limit, their income should cross the basic exemption limit before giving the exemption. Same logic. If they don't file the return on time, that is by 31st of October, they will be liable for again two things. First, 272A penalty of 500 and a fee of 234F. Both the things, just like the charitable trust. Then 139(4)(d), certain university, education institution covered under 35(1)(2) and 1(3), like scientific research association, social science, statistical research. For them, it is always mandatory to file the return. No limit. 234F fee will be imposed if they don't file. Similarly, for business trust and investment fund, these are two very important topics in your syllabus. For them also, it is always mandatory. No monetary limit. Don't check basic exemption limit also. File the return. If you don't file, then you will be liable for a fee under 234F. I hope it is clear to all of you. Now coming to the next section, here we complete the section 139 completely, subsection 1 and its related provisions. Now let's talk about 139(3). Read with section 80. What does 139(3) talks about? It talks about loss return. If you want to carry forward PGBP loss or capital gain loss, then you have to file the return on time. It is as simple as that. If you want to carry forward the loss to the next year, which loss? PGBP and CG loss, then you have to file the return on time. This section is not applicable to house property loss or UAD loss. House property loss or UAD can be carried forward even by filing a late return, even by filing a belated return. It doesn't matter. This section is only applicable for carry forward of PGBP loss and CG loss. Similarly, if you want to set off the loss in the current year itself, then there is no restriction to file the return on time. There is one business in which there is a loss, there is another business in which there is a profit. You want to set off in the same year, you can set off it, no problem, even by filing a late return. Only if you want to carry forward the current year loss, there is a restriction of what? There is a restriction of what? Filing the return on time. I hope it is clear to all of you. Even if you want to bring your brought forward losses of last year, suppose there was a loss last year of PGBP of 5 lakh rupees. Now you are bringing in the current year. Now in the current year you have filed the return late. You can carry forward the last year losses. No issue in that. Current year losses will not be allowed to carry forward if you don't file the return on time. I hope it is clear to all of you. Now there is a CBDT circular over here which has been changed. Last year only they have changed in 2023. Now in 2024 they have again changed. While doing the batch, the limits were slightly different. Now while doing the batch, when I was teaching you all these things, that time the limits were slightly different. Then later on in the month of October, they have changed the limits. So I have attached one note also in the batch. You can watch that later on. But here also you can change the limits in your book itself if you don't have the latest limits. You have to follow this limits which is given in the green now, because in the middle of the batch they have changed it. Okay. So what is the limit? First of all, explain you the logic behind this particular circular. This circular talks about that if there is a loss or if there is a refund, and if there is a loss or if there is a refund, and if you are not able to file the return on time, then you can make an application to respective authority for condonation of delay, and they will allow you to carry forward the loss. They will allow you to get the refund back. Now to whom I should make an application? You should make an application to CIT if the loss is up to 1 crore rupees. You can make an application to Chief CIT if a loss is more than 1 crore but up to 3 crore. And you can make an application to Chief Commissioner of Income Tax. Principal Chief Commissioner, sorry. First Chief Commissioner and point number C, Principal Chief Commissioner if the loss is more than 3 crore rupees. I can make an application for how many years? You can make an application for 5 years. Earlier it was 6 years. Now they have reduced to 5 years. 5 years from the end of the relevant assessment year, you can make an application. So for previous year 24-25, previous year 24-25 is assessment year 25-26. So from that year, from 25-26, from the end of 25-26, you can make an application for 5 years. That is, you can make an application till 2031 March. It is allowed. Your application will be given to CIT. CIT will give the application to AO to make necessary inquiry, and then AO will decide whether the application is fit or not, whether the refund should be given or not, or whether the loss should be carried forward or not. But in any case, if refund is given, the interest on refund will not be allowed. Please, sorry, spare us. Interest on refund will not be allowed to you. Only refund will be given. No interest will be given on refund. I hope it is clear to all of you. Now let's talk about what? The next section, that is belated return under 139 subsection 4. If you are not able to file the return on time, then you can file belated return by 31st December of the AY. For example, for previous year 24-25, you have to file the return by 31st December 2025 or before completion of assessment, whichever is earlier. If the assessment is completed, say in the month of November, then you have to file in the month of November. Now a question will arise, which assessment is completed even without filing the return? There is only one assessment which is possible even without filing the return, and that is best judgment assessment under 144. So if you have not filed the return, the department can do best judgment against you. Suppose they did a best judgment in the month of November only, on 15 November 2025, they have done the best judgment. Now you don't have the time to file the return till 31st December. You have to file before 15 November. Okay. So it is 31st December or before completion of assessment, whichever is earlier. One more thing. What do I mean by completion of assessment? When can I say the assessment is completed? The assessment is set to be completed on the date on which the order is passed by the assessing officer, and not the date on which you receive the order. The date on which you receive the order, that date is not considered to be date of completion. The date on which the order is passed, it is signed by the assessing officer, that date is considered to be the date of what? Completion. I hope it is clear to all of you. Let's move on to the next section now. 139 subsection 5, revised return. If you have filed a return on time, or if you have filed even a belated return, both can be revised. If there is some mistake, some omission, if you have done some mistake, some omission, you can revise that return under 139.5. What is the time limit? The time limit is same as the belated return, that is by 31st of December or before completion of assessment, whichever is earlier. So how many times I can revise the return? You can revise the return n number of times subject to the time limit, that is subject to 31st December or before completion of assessment, whichever is earlier. There is no restriction on number of times the return can be revised. You can revise for n number of times. Can I revise the return even after the scrutiny? The answer is yes. If the department has, if the AO has sent you a scrutiny notice, if you want to revise after that, you can revise after that also, because you have the time till 31st December or before completion of assessment. Giving a scrutiny notice does not mean the assessment is completed. Assessment is completed on the date on which the order is passed. Once the AO will pass the order, after that you cannot revise. I hope it is clear to all of you. Okay. Then, can I just, next is a High Court judgment of Orissa Rural Housing Development. Says he cannot revise the particulars filed in the original return by filing a revised statement. So if you want to revise something, you cannot just give a revised statement to the department and change the things. No, you have to file a proper revised return. You are just giving a statement to the officer. Officer will not entertain. You have to revise the income tax return and not give a revised statement. I hope it is clear. There is a difference between giving a revised statement and giving what? A revised return. You have to give a revised return, not a revised statement, if you want to change the things. Next, 139 subsection 9, defective return. Sir, what is defective return? Defective return means you have filed a return. Defective return, first of all, is given under section 139 subsection 9. You have filed the return. Now, after you have filed the return, the AO has found some defect in that, some mistake in that. So, AO will intimate you. And AO will give you an opportunity of being heard for 15 days. He will tell you that within 15 days you have to rectify the defect. If required, you can also ask for an extension. He will give you an extension also beyond 15 days if required. Now, if you don't revise, or if you don't change that defect, if you don't cure that defect within the time given by the AO, then your return will be considered to be void ab initio. Check please. So it's a department initiated point where the department will initiate the proceeding against you, where department will send you a notice that their return is defect and you have to rectify. If you don't rectify within the time given by the law, then it will be considered to be void ab initio. I hope it is clear to all of you. Now there are certain procedural points that we need to answer one by one. There are two types of procedural points that we need to answer here. One is with respect to permanent account number, PAN number. Second is with respect to AADHAR number. So there are, and then we are going to link both of them. So this is what the procedure we are going to learn in the next few pages. So pay attention, all of you. So you have to remember few limits over here, few amounts over here, few dates over here. First of all, 139A, permanent account number. Who is required to apply for PAN? Who is obligated to apply for PAN? Let's see who is obligated to apply for PAN. If your total income or total income of any other person in respect of which you are assessable. So if you are responsible, so if there is a person, there is a minor in respect of which you are assessable. Or if your income is greater than basic exemption limit, you are supposed to make an application for PAN, and you have to make an application up to 31st May of the AY. So previous year 24-25. So you can make an application up to 31st May 2025. Okay. So every person whose total income is greater than basic exemption limit, they are liable to make an application for PAN up to 31st May of the AY. Second, if your business or profession turnover or gross receipt is likely to exceed 5 lakh rupees, So if your turnover of business or profession gross receipt is greater than 5 lakh rupees, you are supposed to make an application, but now stricter time limit up to the end of the previous year by 31st of March. Okay. Third, a trust is who files return under 139(4)(a). We have seen now a charitable trust files return under 139(4)(a). A trust who files return under 139(4)(a) is liable to file the make an application for PAN up to the end of the PY. Fourth, a resident other than individual HUF, other than only individual. Other than individual means it might be HUF, it might be firm, it might be LLP, it might be company. So any LLP, company, firm, AOP, BOI, except individual, if they are resident, and if they are entering into a financial transaction of more than or equal to 2,50,000 rupees, so other than individual, anybody who is entering into a financial transaction of more than or equal to 2,50,000 rupees, and if the person is resident, is liable to make an application for PAN up to 31st of May. Now all those people who are there, their respective caretaker, like MD of a company, director of a company, partner of a firm, trustee of a trust, author of a trust, founder of a trust, karta of an HUF, etc. All of them are also liable to file the application for PAN up to 31st May. So this point number 4 and 5 are linked to each other. Point number 4 contains the entities who are resident other than individual. Point number 5 talks about the caretaker of the entities. Both of them are liable to file an application for PAN up to 31st May. And last but not least, very recently inserted, if you are going to a bank or a cooperative bank and depositing cash of 20 lakh rupees or more in a financial year in one or more account. So if I am going to a bank or cooperative bank depositing 20 lakh or more cash, or if I am going to bank or cooperative bank and withdrawing cash of 20 lakh rupees or more, or if I am going to a bank and opening a current account or a cash credit account, not saving account. Current account means business account, cash credit account means loan account. If I am going to bank and cooperative bank doing these three things, then I am liable to make an application at least 7 days before the date on which I intend to enter into the transaction. So whenever I intend to enter into the transaction, at least 7 days before that I have to make an application. I hope it is clear to all of you. Is it clear? So these are the category for whom making an application for PAN is mandatory. Now let's talk about in which all transaction we are supposed to code the PAN. We do any transaction in the market. We go to the shopping mall, we buy something. Are we supposed to quote a PAN over there? We buy shares and security, we buy debentures, we buy bonds, we buy car, we buy house. Are we supposed to quote PAN over here? So that's what we are going to learn now. Let's see one by one all the cases where we are supposed to quote our PAN. Okay. Suppose if you are purchasing or selling a motor vehicle other than two-wheeler. For two-wheeler, you need not have to quote the PAN. You have to quote the PAN. All transaction. All transaction means irrespective of the amount for which the vehicle is purchased or sold. The vehicle is of 5 lakhs or 5 crore, it doesn't matter, you have to quote the PAN. Similarly, if you open a bank, if you open an account other than fixed deposit and other than saving bank account, not fixed deposit, not saving bank, it means which account? It means cash credit account. It means current account. Then you have to open, then you have to quote a PAN. For that, PAN is mandatory. That's the reason you have to apply for PAN over here. Okay. In point number C over here of point number 6. Similarly, if you want debit card or credit card, and if you are making an application to bank or cooperative bank for debit card, credit card, you have to make an app. You have to give the PAN. You have to quote your PAN. Without that, it is not possible. Similarly, if you want to open a demat account for trading in stock market, then also you have to give your PAN. Similarly, if you are making a payment of hotel or restaurant bill of 25 or 50,000 or more, now here they are putting the word cash. If you are making the payment by online, then there is no need to quote the PAN. But if you are making a payment of 50,000 rupees or more in cash, then you have to what? Then you have to quote your PAN, not for online payments. Okay. Similarly, if you are traveling to foreign country and you are making payment to any agent, or you are purchasing foreign currency because you are traveling to foreign country and you are making the payment in cash of 50,000 rupees or more, you have to quote the PAN. So here in these 2 points, the word cash is important. If you are making the payment online in these 2 points, you need not have to quote it. But if you are making the payment in cash, you have to quote the PAN. Next, if you are purchasing mutual fund of more than 50,000, whether in cash or not in cash, both the transaction has to be quoted over here because here the word cash is not mentioned. You have to be very careful with these small points. Similarly, if you are purchasing some bonds or debentures from companies or institution of more than 50,000, again cash, without cash, it doesn't matter. Similarly, if you are buying some RBI bonds, you are acquiring some bonds from RBI of 50,000 rupees or more, you have to quote your PAN. Without that, it is not possible. Similarly, if you go to bank or cooperative bank or post office and deposit more than 50,000 rupees in a day, this you would have exercised in your experienced in your practical life also. If you want to deposit more than 50,000 rupees in a day in a bank or cooperative bank or post office, you have to give your PAN. Similarly, if you want to purchase bank draft or pay order or banker's check of more than 50,000 rupees in cash, you have to give your PAN. Similarly, if you want to open a fixed deposit in a bank or cooperative bank or post office or Nidhi company or NBFC, now for fixed deposit there are two limits. If the fixed deposit value is more than 50,000 rupees, you have to quote a PAN. Or if the aggregate fixed deposit in the entire financial year is more than 5 lakh rupees. If the single deposit is more than 50,000 rupees, if single FD is more than 50,000 rupees, you have to quote the PAN. If the aggregate deposit is more than 5 lakh rupees, then also you have to quote the PAN. If you are buying some prepaid instrument from bank or cooperative bank, etc. of more than 50,000 rupees, you have to give the PAN. Similarly, if you are paying some life insurance premium to the insurance company of more than 50,000 rupees in the entire financial year, you have to give the PAN. Similarly, if you are selling or purchasing some securities other than shares, or if you are purchasing and selling unlisted shares, then also you have to give a PAN if the amount of transaction is more than 1 lakh rupees. Sir, what about listed shares? For listed shares, already you have given PAN while opening what? While opening a demat account. Yes. So for listed shares, there is no need to give PAN again. Similarly, sale or purchase of immobile property. If you are purchasing or selling a mobile property whose value or stamp duty value, either of the two is greater than 10 lakh rupees, you have to give a PAN. And last but not least, which is a very general point, if you sell or purchase any goods or services other than the above, then you have to give a PAN if the value of transaction is more than 2 lakh rupees. Suppose if you go to a showroom of a watch and say if you went to the showroom of a Rolex watch and you are purchasing a Rolex watch of 5 lakh rupees, then that watch company will take what? Will take your PAN, because the value of the transaction is more than 2 lakh rupees. They are obligated to take your PAN. I hope it is clear to all of you. So these are the cases where you are supposed to quote your PAN. Okay. Now there are few people who are not obligated to obtain PAN. They are relaxed from obtaining PAN. They are not necessary to make an application for PAN number. Who are those people? Who are those fortunate people? Suppose if a minor is not having any taxable income, minor does not have any taxable income, can enter into the above transaction by quoting the PAN of his parents or guardian. Okay. Suppose my daughter is there, she does not have any taxable income, I can open a fixed deposit in her account, in the name of her account, in the PAN of my PAN. So a minor not having a taxable income can do the above transaction with the PAN of parents or guardian. Now second one is something which you have just seen in 139, the non-resident who was exempted. Suppose if there is a non-resident who only earn income from investment fund. Remember AIF, which is located in IFSC, a non-resident who only earn income from AIF, who is located in IFSC, whose TDS is deducted under 194 LBB, he is not obligated to obtain PAN also. He is not obligated to file the return also. Okay. And the third one, which we will see later on in the chapter of capital gains. Suppose if a non-resident who is a foreign investor who is earning income from capital assets referred under 47(7)(ab), which are listed on a recognized stock exchange in IFSC, and the consideration is payable in foreign currency, these people are also not liable to file the application for PAN. They are not supposed to take the PAN. Okay. I hope it is clear. But the third point we will see later when we will see the provisions of 47(7)(ab). It is linked with what? Capital gains. Now for the second and the third category of people, the government has said that we will not require your PAN, but we need some basic data from you all. We need some basic data. What is the basic data? We need your name, email ID, contact number. We need the address in the foreign country in which you are resident. We need the declaration that you are a resident of a foreign country. We need your tax identification number of your country, that is your PAN number of your country. In your respective country, you would have taken some PAN. We need that particular PAN. I hope it is clear to all of you. Similarly, the broker, the specified fund of the broker should quarterly file the statement for quarter in which the above details are received in form 49B. Okay. So now the broker in which this specified fund has to file a what? Quarterly statement, and the broker over here in the listed stock exchange also has to file a statement that these are the people who has invested in our stock exchange, and they have to do this within the prescribed time mentioned over here. So these are very procedural, not very important for examination according to me. Now coming to the next point. What is the next point? So the next point is PAN and Aadhaar are nowadays interchangeable. So instead of PAN you can give Aadhaar in some circumstances. Now what are the cases in which instead of PAN you can give Aadhaar number? Now you have to quote PAN at many transactions like this. Over around 17 to 18 transactions are there in which you are supposed to quote your PAN. So instead of quoting the PAN, you can quote Aadhaar. When? So every person who is required to intimate or quote his PAN may quote his Aadhaar. When? If he has not been allotted PAN. He has not been allotted PAN, so instead of PAN, he can quote what? Aadhaar. So you are going to buy a vehicle and you don't have a PAN, so you can take an Aadhaar, and in that case the department will automatically allocate you what? PAN without any document and fees. Okay. Similarly, if you have already been allocated PAN and if your PAN and Aadhaar is already linked, so you can interchangeably use both of them. Okay, you can give PAN instead of Aadhaar, you can give Aadhaar instead of PAN. Both of them are interchangeable transaction. Okay. Similarly, every person entering into prescribed transaction like depositing more than equal to 20 lakh or withdrawing more than equal to 20 lakh or opening a current or cash credit account, etc., shall be required to authenticate the PAN or Aadhaar quoted. Okay, they have to authenticate the PAN or Aadhaar quoted. Also, every person receiving such document should also ensure, I am giving that my Aadhaar and PAN to that dealer of car. He should also ensure that the PAN and Aadhaar which is quoted by me to them, that is authenticated. So the person should give an official PAN, genuine PAN. The person who is receiving should also give what? Should also accept that, should also check that, verify that the PAN given by the customer is genuine or not. Okay. Similarly, this point, second point, is not relevant to certain people. That is, it is not applicable to central government, state government, or to certain consular offices. This is not applicable to them. Now, if you make any violation in the provisions of PAN, then you will be liable for a penalty. How much? If you fail to comply with the provisions of PAN, 139A, if you don't make an application of PAN in this case, then you will be liable for a penalty of how much? Of 10,000 rupees. Similarly, if a person requires to quote his PAN or Aadhaar in any document and quotes a false PAN, if you quote a false PAN, you are supposed to quote a PAN, but you are quoting a wrong number, then also 10,000 rupees penalty. Similarly, if you are entering into prescribed transaction, you fail to authenticate the PAN, the way you are supposed to authenticate your PAN over here. You are entering into prescribed transaction, you are not authenticating your PAN, then also you are liable for penalty. And the person who is receiving the PAN, that person who is receiving the PAN from you, that is dealer of car who is receiving the PAN from you, and if he is not authenticating the PAN, then he will also be liable for a penalty of 10,000 rupees. Okay. Now let's talk about Aadhaar number. The provisions of Aadhaar number are given under the provisions of section 139AA. Now what is Aadhaar number? Every person who is eligible to obtain Aadhaar on or 1st July 2017 shall quote Aadhaar number. Listen carefully, where you are supposed to quote. You have to quote your Aadhaar number in your application form for PAN. Whenever you will apply for PAN, you should quote your Aadhaar number also over there. You should quote your Aadhaar number in the return of income also. Okay. So if I am making an application for PAN, in that I should quote my Aadhaar number. I should quote my Aadhaar number in the return of income also. Now if Aadhaar is not available, then I should quote my application ID. If Aadhaar is not available, I have made an application for Aadhaar, but the Aadhaar is not yet received. So I have an application ID of Aadhaar. That I should quote in my what? In my PAN application. But from 1st October, this condition is not applicable. Okay. So they have made an amendment that from 1st October 2024, this condition is not applicable to the SSE. Similarly, every person already holding a PAN on 1st July 2017, if you already hold a PAN, then you should link your PAN and Aadhaar by 31st of March 2022. Otherwise, your PAN will become inoperative and you have to face some negative consequences, serious consequences, which I am going to tell you now on the next page. Okay. Now, similarly, there is one amendment made over here. Every person who has been allotted permanent account number, you have been allotted the PAN number on the basis of enrollment ID. Okay. So, on the basis of this enrollment ID, you have been allotted PAN number. So, whenever your Aadhaar number will actually come, you have to give that Aadhaar number to the income tax department. Listen carefully the flow. So, when you make an application for a PAN number, at that time you did not have Aadhaar. So, you gave your Aadhaar enrollment ID and you took the PAN number. Later on, you got the Aadhaar. So, you should give that Aadhaar number also to the income tax department. That's what this particular paragraph wants to tell us. Okay. Now, this section is not applicable. This linking and all, Aadhaar and PAN linking, all these things are not applicable to certain people. If you are residing in J&K, this section is not applicable. Meghalaya not applicable. Assam not applicable. If you are a non-resident, obviously non-resident will not obtain Aadhaar and all. Correct. They are not going to link Aadhaar and PAN, all those things. If you are of 80 years and more, we don't want to unnecessarily trouble you because you are very old. Similarly, if you are not a citizen of India, why a foreign citizen will apply for what? Aadhaar number in India. Are you clear? They are also not liable for Aadhaar number. Similarly, again and again, one point will come by 31st of March 2022. You are supposed to link your Aadhaar and PAN. If you don't link your Aadhaar and PAN, there will be serious consequences. There will be penalty. There will be fee. First of all, I am talking about, and your PAN will also be inoperative. First of all, I'll talk about the fee. If you don't link your PAN by 31st of March 2022, from 1st April 2022, you will be liable for a fee of under 234H of 500 rupees if you link by 30th June 2022. That is, if you link in April 22, May 22, June 22, and if you link beyond June 22, then it will be 1000 rupees. I hope it is clear to all of you. It is how much? It is 1000 rupees. If SSE fails to link by 31st of March, the PAN will be inoperative. Again and again, the point is coming and negative consequences will apply. Then whenever you will link later on in future within 30 days of that. Whenever you will link in future and pay the fee under the 234H, link first of all, pay the fee under 234H, and then within 30 days the PAN will become operative. Till then the PAN will be inoperative. And from 31st of July 2023, the consequences will be serious. If you don't link your PAN and Aadhaar till 31st of July 2023, then following consequences will arise against you. First, if there is any refund due from the department, you will not get the refund. You will not get the refund under any circumstance. Second, you will not get the interest on the refund for that much period. Okay. So from 31st of July, and you have linked in the month of December. So from July to December, if there is some interest on refund, that much interest you will not get. Similarly, during that period, from July to December, when you have not linked the Aadhaar and PAN, that period, if somebody is making you payment, they will deduct TDS at higher rate as per 206AA or 206CC. Higher rate means in case of TDS, they will deduct at 20% or actual rate, whichever is higher, as if you don't have a PAN. Are you clear or not? Because your PAN is inoperative. Because your PAN is inoperative, we are liable to the payer will deduct the TDS at higher rate in your case. So it is your duty to link on time. Otherwise, you have to face all these consequences. But there is some relaxation given by CBDT in the form of a circular. That CBDT has specified that for transactions entered into 31st March. So up to 31st March, if we have done the transaction and if you have linked Aadhaar and PAN before 31st of May, transaction is done till March and linking is done till May, then there is no need to deduct TDS and TCS at higher rate. The department will not deduct TDS and TCS at what? Higher rate in your case. I hope it is clear to all of you. So now let's go ahead with the next part, which talks about notices which should be sent by the department, which will be sent by the different income tax authority, including the assessing officer. The very first notice that the assessing officer may send all of us is 142 subsection 1 clause 1. What is this notice? If you don't file the return on time, that is within the due date mentioned under 139(1), then you may be sent a notice by the AO, or certain prescribed income tax authority may also send you the notice. So if you don't file the return on time, then the AO or the prescribed income tax authority will send you a notice, will remind you to file the income tax return, and the return should be filed within the time mentioned in the notice. Generally, they will allow you around 15 to 20 days to file the income tax return. Now, in this section, you need to keep one thing in mind, that the notice under this section will be sent by the assessing officer as well as certain prescribed income tax authority. So you will ask me, who is a prescribed income tax authority? That is defined under Rule 12F. That is an income tax authority not below the rank of income tax officer. So any authority which is income tax officer or above that has the authority to send notice under this section. Okay. Now once you file the return under this section, that return will be called as a return filed under section 142 subsection 1 clause 1 return. Okay, be very careful. One last thing in this section, can a AO do best judgment assessment with the help of this notice? Can the AO say that I have sent a notice under 142(1) subsection 1 clause 1 to the assessee, now I want to do best judgment assessment? No, this notice is not sufficient to initiate best judgment assessment. To initiate best judgment assessment, you need to send a separate notice, a show cause notice under section 144, about which we are going to talk about in some time. Okay, so that is what it is mentioned in keynote number 1. Now there is one more power which is given under clause 2 of this particular subsection. 142 subsection 1 has two clauses. Clause 1 allows you to send a notice and where you will file the return within the time specified in the notice, and clause 2 talks about doing some preliminary inquiry by the assessing officer. The assessing officer wants some information from you. That's the reason he will send you this particular notice. This notice is generally sent during the assessment to call for certain documents and information. So with the help of this notice, what all things the AO can ask for? The AO can ask for your accounts, the AO can ask for your documents, the AO can ask for your information, the AO can also ask for the statement of asset and liabilities from the assessee. Plus, in this section, the AO can ask only information of the last 3 years. He cannot ask the information beyond 3 years. Only last 3 years information can be asked by the assessing officer in this particular section. One more thing to be kept in mind, again with the help of this section, you cannot initiate any assessment. To initiate different kind of assessments, there are different kind of notices which you have to send. Like there are 4 assessments in all under the income tax law. First is a regular assessment under 143 subsection 3. If the AO wants to initiate this assessment, he has to send a scrutiny notice under 143 subsection 2. This is a synopsis of all the notices and all the assessment section. Second, if the AO wants to do best judgment assessment, then he has to issue a show cause notice under best judgment under 144. except some cases where there is no need to send any show cause notice, which we will talk in some time in today's session only. Third, if the AO wants to do income escaping assessment under 147, then the AO has to send a notice under 148. Without that, income escaping assessment is not possible. Fourth, if the AO wants to do a new assessment which is applicable from 1st September 2024, which is called as a block assessment in case of search and seizure, then the AO has to issue a notice under 158 BC. Without sending this notice, the AO cannot do a block assessment. Therefore, moral of the story I am trying to say, with the help of notice under 142(1), clause 1 or clause 2, you cannot initiate any particular proceeding, assessment proceeding. For assessment proceedings, there are separate sections which you have to comply with. Okay, I hope it is clear to all of you. Let's move on to the next power of the assessing officer, that is given under section 142 subsection 2A, the power to conduct special audit, the power to conduct inventory valuation. Now, when this power can be exercised, who can exercise, what are the circumstances in which it can be exercised, what is the time, who will do the audit, all those things we are going to address in this particular section. First of all, who has the power to initiate special audit? Who has the power to initiate and tell the assessee that go and get your books of accounts audited, go and get your inventory valued? This power is given exclusively to the assessing officer, not to any other person. Secondly, this power is only during the pendency of the proceeding. It means the proceeding has to be pending. If the proceeding is completed, the order is passed by the assessing officer. After this power cannot be exercised. Now, third, when this power can be exercised, what are the circumstances under which this power can be exercised? The AO should have opinion. What opinion? That the books of accounts are very complex. The books of accounts are very voluminous. The books of accounts are, he doubt about the correctness of the books. The books of accounts have multiplicity of transactions. The books of accounts have specialized nature of business. The AO should have opinion, should form these opinions that the books of accounts, something like this has happened with the books of accounts. And it is also in the interest of the income tax department. Otherwise, it doesn't make sense to do audit. If there is an audit requirement because of which the department will get 200 rupees extra, what is the interest of the department in that? It has to be in the interest of department to do the audit. So if the AO is of the opinion that during the proceedings are pending, pendency of proceeding is important, AO can initiate this particular section, and the AO should have the opinion that the books are very complex, voluminous, multiplicity, specialized nature, and doubts about the correctness, and also at the same time it is in the interest of the revenue. Then he will direct the assessee to get the books of accounts audited or inventory valued, or both the things. Now, he cannot give a direction unless and until he takes a prior approval. He has to take a prior approval from commissioner, chief commissioner, principal chief commissioner, or principal or chief commissioner, as the case may be. So he has to take a prior approval from them. Plus, before giving a direction for special audit to the assessee, or before giving a direction for inventory valuation to the assessee, he has to give an opportunity of being heard to the assessee first. First, he will give an opportunity of being heard to the assessee. The assessee will reply, and then the AO will initiate what? With the proceedings under this particular section. Plus, if it does not give an opportunity of being heard to the assessee, then the assessee has an option to go to High Court and file a writ petition against the assessing officer's direction, and the High Court can quash such direction if it is against the assessee. Next. Sir, who will determine the cost of the audit, the cost of inventory valuation? Sir, who will bear all those things, and all those expenses will be borne by whom? So first of all, a CA or a cost accountant will be nominated by the commissioner, and accordingly the remuneration, the CA will be doing the audit and the cost accountant will do the inventory valuation. Secondly, the remuneration, etc., and all other incidental expenses will be borne by the central government. It is the central government who is going to bear all those expenses. Assessee is not going to bear all those expenses. It is the government who has to bear those expenses. Sir, what is the minimum charges that you are going to pay to the chartered accountant, etc.? If you are a qualified chartered accountant, then you will be paid maximum 7,500 per hour. Per hour, maximum 7,500. And if you are a semi-qualified, then you will be paid maximum 3,750 per hour. Not more than that. Okay. Next. Sir, what is the time within which the assessee should get the books of accounts audited or inventory valued? Suppose if the AO is giving the direction today, then the assessee should get the books of accounts audited or inventory valued within the time specified in the direction. So there is no specific time mentioned in the law. The time will be set by the assessing officer. Say it is 60 days or 90 days. So in 60 days or 90 days, the assessee has to get his books of accounts audited or inventory valued. Can there be an extension? Yes, there can be an extension of some more days, but the original period and the extended period cannot be more than 180 days. If the original period is 100 days, then the extended period has to be maximum 80 days. If the original period is 120 days, then the extended period has to be maximum 60 days. It cannot be. The total of original and the maximum and the extended period cannot be more than 180 days. I hope it is clear to all of you. Now everything is done. Audit is done. AO wants to use that audit report to complete the assessment. Can the AO use that audit report to complete the assessment? Why not? Definitely. For that purpose only he is doing the audit. But he has to give an opportunity of being heard to the assessee. But that opportunity of being heard will not be given in case of best judgment assessment. So if the AO wants to use the audit report, he can use the audit report, but only after giving an opportunity of being heard to the assessee. But in case of best judgment assessment, he can use the audit report without giving the opportunity of being heard also. Last but not least, if the assessee does not comply with best judgment proceedings, then what are the actions that the department can take? First of all, the AO can do best judgment against you under section 144, which we are going to talk after some time. Secondly, the AO may impose a penalty of how much? 10,000 rupees for not complying with department's direction under section 272A. I hope it is clear to all of you. Now let's talk about the next power, which is a small power given under 142A, valuation by the valuation officer. Suppose the assessing officer is doing your assessment or reassessment, and during the assessment, the assessing officer is finding that some assets are not properly valued. Some assets are not properly, the fair market value of the assets are not properly computed, or the stocks are not properly valued. Then he has the power to refer the matter to valuation officer. So if the AO is not sure about the value, then he can refer the matter to valuation officer. Okay. Now, while referring the matter to valuation officer, there is no need that the books of accounts should be completely rejected. Whether the books of accounts are correct, then also he can refer the matter to valuation officer. Whether the books of accounts are incorrect, then also he can refer the matter to the valuation officer. Referring the matter to valuation officer has nothing to do with the correctness of the books of accounts. Okay. This condition was there prior to 2014, but in Finance Act 2014, the government has put a clause. The AO may refer the matter to valuation officer irrespective of whether or not he doubts about the correctness of the books of accounts. Now, once the matter has been referred to the valuation officer, what will the valuation officer do? The valuation officer will first ask the assessee. If the assessee is cooperating, he will take all the evidences from the assessee and he will determine the value. If the assessee is not cooperating, he will do the valuation based on the best of his judgments. So he can do valuation based on two things. Either on assessee's whether assessee is giving all the documents and information, then based on assessee's information, he will do the valuation. Or if the assessee is not giving the information, he will do the valuation based on the best of his judgment. Then he will give the report to whom? To the assessing officer and to the AO. What is the time limit to give the report? The time limit to give the report is within 6 months from the end of the month in which the reference was made by the assessing officer. So if the reference is made in January 2025, so from the end of Jan 2025, you have 6 months time to give the report. Okay. Then the AO will use that report, will give an opportunity of being heard to the assessee and will complete the assessment as per the relevant sections of the income tax law. Now, whatever powers I have told you in this part of this chapter, that is 142 subsection 2A and 142A. All these powers are going to be conducted faceless now. Nothing has to be physically present. The AO will send you the notice online. You have to reply online. Everything will be online. Nothing has to be done physically in today's world. Now let's move on to the next section, that is 143 subsection 1, which talks about processing of returns under the income tax law. Now what do I mean by processing of return? All the returns which are filed by all the assessees of this country will go to the Bangalore first. And in Bengaluru, the returns are processed in a CBDT software. There is a separate software made by CBDT where the return will be processed, and return will identify certain small mistakes, will identify some mistakes. And after the mistakes are identified, the software will add back your income or will reduce your income, will determine tax payable, will determine tax refundable, and will give you the refund or will ask for the tax, as the case may be. Okay. So first of all, we need to identify that which all returns will be processed over. All the returns will be processed which are mentioned under 139.1 will be processed. 139.1, 139.3, 139.4, 139.5, 139.9. Every return which is filed under different subsections of 139 will be processed, and even a return which is filed under 142.1 will also be processed over here. First thing, the software will identify certain mistakes. Which are those mistakes? I'll explain you with the help of example all the mistakes that the maximum software can identify. The first mistake that the software will identify is if there is any arithmetical error in the return. If there is any arithmetical error, calculation error in the return, then the software will identify and will let you know. Okay. The second mistake the software will identify is a technical line. An incorrect claim if such incorrect claim is apparent from information in the return. Now what do I mean by this, sir? In this, the government has defined 3 points. 3 points are considered to be incorrect claim. First, a claim on the basis of an entry which is inconsistent with another entry in the return. Now what do I mean by this? Let me give you an example. Suppose there is a return which is of 25 pages. On the 5th page, you are computing your PGBP income, and on the 25th page, you are computing your block of asset schedule. Now, in the block of asset schedule, the depreciation amount is different, and while computing the PGBP income, the depreciation amount is different. If these two amounts are different, then it is called as an item in a return is inconsistent with another item in the same return. Obviously, the depreciation claim which you do under PGBP and the schedule amount of depreciation should match with each other. If it is not matching, then it is an incorrect claim apparent from information in the return, because one item is inconsistent with the another item. I hope the first point is clear to all of you. I have explained all of them in your respective classes in detail with the help of examples. Second one, information required to substantiate entry has not been furnished. Suppose there is a particular entry, there is a particular deduction which you have claimed in the return, but there is some information is required to substantiate that entry. That information is missing in that particular return. Example, suppose if I am giving donation to somebody, under 80G I am claiming that deduction. Now there is a requirement that if you are claiming deduction under 80G, you need to give the PAN of the donee. If the PAN of the donee is not given, then the software will pick up that and will say that information required to substantiate the entry is not there. Therefore, I will what? The software will disallow that particular expenditure. Okay. Human intervention is not required for such things. Such things are nowadays done by CBDT software only. Third point, deduction exceeds statutory limit. 80C you are claiming 1 lakh, more than 1 lakh 50. Then house property deductions you are claiming more than 30%. All those things software will pick up and will add back. These 3 points are called as incorrect claim apparent from information in the return. Further, a few more mistakes which can be identified by the software and it will add back. 3 more mistakes that the software will identify and add back. Disallowance of loss. Which kind of loss? Last year you have filed late return and you have claimed a PGBP loss. Can you carry forward that PGBP loss in the current year by filing a late return? The answer is no. Now, but still you have carry forward and set off. Software knows that you have filed a late return. Software will pick up that loss and will add back that loss and send you a notice. Okay. Similarly, there is an expenditure which is disallowed as per the tax audit report. In the tax audit report, the auditor is saying that this expenditure shall not be allowed, but while computing the PGBP income, you are claiming that expenditure. Therefore, there is a mismatch between the tax audit report and your income tax return. The software will pick that and will add back and will disallow that expenditure. Similarly, if you are claiming any profit link deduction or 10AA, profit link deduction under 10AA or chapter 6A, and I have told you, if you want to claim any profit link deduction, you have to file the return on time. If you file a late return and if you claim a profit link deduction, then that expenditure will be what? That deduction will be what? Disallowed under the income tax law. That is not allowed as a deduction to you. The software will pick up that and software will add back that. Check it please. Now, before making a final addition, the software will send you an intimation first and will give you a period of 30 days to respond. It's a kind of opportunity of being heard given by the department to you before making a final intimation. Now, if you reply within 30 days, well and good. If you don't reply within 30 days, then the department will pass the final intimation. After 30 days, they will pass the intimation and they will send you the intimation. What is an intimation? Intimation, it's a kind of small order only. It's a small order, very small. It's not an order, but it's a kind of very small order whereby the intimation is nothing but this much is the tax as per income tax department and this much is the tax as per SEP, and if there is any difference, you have to pay or you have to take that as a refund. Okay. I hope it is clear to all of you. Now, is it when this intimation will be sent by the department? There is a time limit for that. This intimation will be sent within 9 months from the end of the financial year in which the return is furnished. So whenever you will file the return from the end of that financial year, in 9 months, the department will send you the intimation. Sir, can you explain us with the help of numbers? Yes. For previous year 24-25, when will you file the return? I will file the return in the month of say July 2025. July 2025 falls in which financial year? It falls in financial year 25-26. So from the end of financial year 25-26, you have 9 months time. So from the end of financial year 25-26, you have 9 months time. It means you have time till 31st December 2026. I hope it is clear to all of you. Okay. Now, is it necessary that they will send intimation in all the cases who will file the return? The answer is no. In every case in which you have filed the return, intimation need not come. But if the department has done any addition or deletion because of these items, because of these 6-7 items, if the department has done anything and there is a refund, there is a payable, or there is a change in loss because of that, then they will mandatorily send an intimation. Otherwise, it is not mandatory to send intimation to every assessee in this world. Against an intimation, if I am not happy, then what is the remedy available with me? If you are not happy with the intimation, you can go and file an appeal to CIT appeal or JC appeal, or you can also go for a rectification proceedings, but you cannot go for revision under 264 against intimation, because against 264 is only possible against order, not against intimation. But later on we will see, while doing the case law chapter, that there are some high court judgments which are now saying that even an intimation can go for revision under 264. These are some contradictory judgments given by some high courts. We will talk about that sometime later, but I would like to do that interlinking today itself. Okay, I hope it is clear to all of you. Now let's go ahead with the next part, which is our first assessment. Now we are going to start with our regular assessment first of all under section 143 subsection 3. Now to start a regular assessment under 143 subsection 3, let me tell you one very important thing, that the AO has to first of all send you a scrutiny notice. Without sending a scrutiny notice, the AO cannot initiate regular assessment under 143 subsection 3. And to send a scrutiny notice, the assessee should file a return under either 139 or 142(1). So all three of them go hand in hand. First you file a return under 139 or 142(1). After that the AO will send you a notice under 143(2), a scrutiny notice. After that only your assessment will be started. So all three are connected to each other. Therefore, where you file a return under 139(1), see on the board, or if you file a return under 142(1), the AO has the power to send you notice under 143(2), and even certain income tax authority not below the rank of ITO. Other income tax authority who are not below the rank of ITO, they can also send you a scrutiny notice. What is the scrutiny notice? It is served to you to ask certain questions. They will ask for certain documents. They will ask for your books of account, they will ask for your bank statement, they will ask for certain information. So it's a kind of routine questions that the department is going to ask you. Okay, so the department is going to serve you this scrutiny notice before starting the assessment. Before starting the assessment, serving of this scrutiny notice is mandatory. Now, what is the time limit to serve this scrutiny notice? Listen carefully. The time limit is most important point over here in this particular section. The time limit is the scrutiny notice has to be served. Served means the assessee should receive the scrutiny notice within the given time. The department, the AO, should serve the scrutiny notice to the assessee within 3 months from the end of the financial year in which the return is furnished. Again, the same question will arise. Let's take one example. Previous year 24-25. Previous year 24-25 is assessment year which year? Assessment year 25-26. So assessment year 25-26. So previous year 24-25, you will file return when? Say you will file return in the month of July 2025. So this is which financial year? This is financial year 25-26. So you are filing the return in 25-26. So from the end of this year, you have to take 3 months. So from the end of 2025-26, 3 years end when? 3 months end when? Sorry, not 3 years, 3 months end where? 3 months end on 30th June 2026. So the AO has to serve the notice till 30th June 2026. This is what the law has to say. Now, there are some hopeless assessees who are trying to be over smart. Let's try to understand what they are trying to do. Suppose there is an assessee to whom a notice is served late. A notice is served on say 5th of July 2026. Now it's a late notice. It's an absolutely late notice. Or suppose an assessee to whom the notice is served on time, but it was not served in a proper manner. It was not in a proper format. The things are not properly written in the notice. The signature of the officer was not there. The stamp of the government of India was not there. In short, it's not a legal notice. It's not a valid notice. It's an invalid notice. Now what the assessee is doing, some over smart assessees are doing what? They know that the notice is late. They know that the notice is improper. Still they are complying. Still they are cooperating with the department. And when the department is passing the final order, when the AO is passing the final assessment order, and if it is in the favor of the assessee, they are silently accepting and taking away the refund and going away from there. But if the AO is passing an order against the assessee, now at that time the assessee is starting to challenge that the notice sent by the department was what? It was an invalid notice. It is not a valid notice. I don't accept this notice. So now the question is, to stop such assessees who challenge the validity of the question after the assessment, the provision of 292BB has been introduced by the government of India. What is 292BB? 292BB talks about that if a notice is coming late or if a notice is coming improper, you should raise the question before completion of assessment. If you start to raise the question after completion of assessment, then it is deemed to be valid, it is deemed to be served on time. You cannot raise this question after completion of assessment. Yes, you have absolute right. If you feel that it is late, if you feel that it is improper, raise the question before completion of assessment. Don't raise the question after completion of assessment. Okay, so this is what this section wants to tell us. Now there is a Supreme Court judgment based on this section. It's a very important Supreme Court judgment. Already 2-3 times has been asked in the examination. You will find this particular case law a lot of times in your past RTP, MTP and exam paper. What is this case law? There was an assessee to whom the notice was not served at all. The notice was not served at all. Again, I am saying the notice was not served at all. And the AO passed the order later on. Then the assessee started saying that, no, it is an invalid order because I was not served a notice only. Then the department started saying that, no, 292BB, you don't know 292BB or what? 292BB, why have you cooperated earlier? So therefore, 292BB, the Lakshman Das Khandelwal case law has said that 292BB can save department only if the notice is served to the assessee, and then if it is improper or if it is late, you can get escaped under 292BB. But if the department has not sent the notice only to the assessee, if the department has not sent the notice to the assessee, then the department cannot say in front of the assessee that you have cooperated with the assessee. No, sending of notice is mandatory to attract what? 292BB. Without sending the notice, 292BB cannot be attracted. This is what this case law has to tell us. Now, after the notice has been served to you, the department will ask lot of questions from you. The department will ask for documents, information, books of accounts, bank statements. The department will also go to third party, take valuation officer report, take special auditor report, and then the AO will gather all the material and evidences, and then AO will pass an order. Determining your total income or loss. If there is an income, then he will determine the income. If there is a loss, then he will determine the loss. Along with that, he will also determine tax payable and tax refundable also. If there is a payable, he will send you a notice of demand. If there is a refundable, he will grant you the refund. Don't worry about it. Okay. Now, some basic questions that I will need to answer to all of you. First of all, the first basic question is, assessment is going on and one assessee is coming in between during the assessment and telling the assessing officer that I failed to claim some deduction. I'm writing you a letter. I'm requesting you through a plain letter. Please allow me the deduction. Whether the officer will allow you the deduction, the court has said that the officer should not allow the deduction in such cases. Where the assessee wants to make any new claim while during the assessment, the assessee has to file a revised return. A new claim cannot be claimed merely on the basis of a plain letter as per the Supreme Court judgment of Goetz India Limited. If the assessee wants new claim, he has absolute right to claim any new deduction. Provided he should file a revised return. Only by giving a letter to the assessing officer, he will not be eligible to claim any new deduction. I hope it is clear to all of you. Now coming to the next point, which is very important point. There are 3 points that I am going to address to all of you. All of them are similar to each other. There are 3 provisos attached to section 143 subsection 3. There are certain assessees whose income is exempt under section 1021, 1022B, 1023A, 1023B. I have already told you. Do you remember while filing the return, while learning the return filing provision, there were 6 type of different assessees, out of which one of them were whose income was exempt under section 10 and they were eligible to file return under 139(4)(c). Now they will file the return under 139(4)(c). All those who are claiming deduction under these sections of section 10 will file return under 139(4)(c). After that return will go to the assessing officer, and after that the assessing officer will start your assessment. Now during assessment, the AO finds that the assessee is not fulfilling all the conditions of the exemption. So now the question is, can the assessing officer disallow the exemption? And the answer is a big no. In all these 3 provisos, the AO does not have suo motu power to disallow the exemption. If he finds that the assessee is violating any of the provision, then he has to intimate that particular violation to the central government or prescribed authority. They will look into the matter. They will cancel the registration of the assessee. Then they will intimate the assessing officer, and then assessing officer will do what? Assessing officer will disallow the exemption. The moral of the story is, he does not have suo motu power to disallow such exemption. Similarly, any trust who are registered under 1023C or who are registered under 12AB, and if the AO finds that the trust has done any specified violation, what is specified violation? That we will learn in the chapter of trust under section 12AB. There are 6-7 items which you do, then that is considered to be specified violation. So if any trust or institution registered under 12AB or 1023C is doing any specified violation, and if AO is satisfied that You are doing specified violation. Again, AO suo moto cannot disallow the exemption. Here, he has to intimate to the Commissioner of Income Tax, and then Commissioner of Income Tax will withdraw the registration, and only then the AO can what? AO can disallow the exemption. Moral of the story, the AO cannot suo moto disallow the exemption in these cases. Third case is certain institutions which are registered under 35(1) to 35(1)(3). These are scientific research association, statistical or social science association and institution. If these institutions are violating some conditions subject to which they are getting some exemption, then again the AO cannot suo moto disallow the exemption. AO has to intimate the certain governmental authority, certain prescribed authority. They will withdraw the exemption, they will withdraw the registration, they will intimate the AO, and then AO will what? Disallow the exemption. Moral of the story, in all these three proviso, the AO suo moto does not have the power to disallow the exemption. Now in all these three proviso, till the whatever time is getting lost by the assessing officer, because when AO will intimate the central government will take its own time to what? To disallow the exemption, to withdraw the in that AO's time will be wasted now. So that much extra time will be given to the assessing officer for completing the assessment. Don't worry, okay? That much extension will be given to the assessing officer for completion of assessment. Last but not least, all the assessments nowadays are going to be online only, whether it is 143, 144, 147, all of them are going to be what? Faceless and faceless. Nothing is going to be physically done in today's world. Everything will be done in a faceless manner. I hope it is clear to all of you. Now let's move on to the next assessment, which is your best judgment assessment. So what are the circumstances under which best judgment assessment can be done? First of all, best judgment assessment can be done in 5 circumstances, out of which in 3 circumstances the AO has to give a show cause notice, and in 2 circumstances he need not give a show cause notice. First of all, let's see all the 5 cases one by one. If the assessee does not file a return on time, then AO will send a show cause notice to the assessee. Show me a cause why a best judgment should not be done against you. And then a show cause notice is nothing but an opportunity of being heard. If assessee explains everything properly, then best judgment will not be done. If assessee does not explain properly, does not give a valid reason, then the AO will do a best judgment assessment. Similarly, if the assessee does not, I'm coming to the third point, if the assessee does not comply with the special audit direction, then the AO will again issue what? A show cause notice, and a best judgment can be done against you. Similarly, if an assessee does not comply with the scrutiny notice, then AO will again send you what? A best judgment show cause notice. Again, an opportunity of being heard will be given, and if you don't reply, properly, then a best judgment can be done against you. If you reply properly, then the best judgment assessment will be dropped. Now, the fourth case, if you don't comply with 142(1) notice, then the AO will directly do the best judgment. Show cause notice is not possible in this case. In this case, the AO does not give a show cause notice. In the first 3 cases, A, C and D, the AO does give you a show cause notice. But in this 142 subsection 1 non-compliance, you are not going to get any kind of show cause notice in that case. That is the catch over here, which you need to keep it in mind. One more thing which we have done long back in the chapter of PGPP. If you violate 145 subsection 3, what is 145 subsection 3? 145 subsection 3 says that if you violate subsection 1 and subsection 2 of section 145, then the AO will do best judgment against you. What is subsection 1 and subsection 2 of 145? Subsection 1 talks about if you don't maintain your books of accounts regularly as per cash or regularly as per mercantile, or if you don't follow the income computation and disclosure standards, then the AO has the power to do what? Best judgment assessment as per 145 subsection 3. So this is what 145 subsection 3 is all about. Now, after all these things, the AO will what? Initiate the proceeding of 144, and he will determine what? He will take all relevant material into his account, and then he will determine the tax payable in your case. In your case, he will determine what? Tax payable. In 144, always remember, you are not going to get any refund under 144. No refund is possible under 144. Forget about refund. Your income cannot be assessed lower than the income which is filed in the income tax return. Suppose in the income tax return you have shown an income of 10 lakh rupees. Now, while doing the best judgment, your income cannot be less than 10 lakh rupees. It has to be greater than 10 lakh rupees. 144 has not been formed for the benefits of the assessee. It has been formed for the benefits of the department, and accordingly, the nature of the section has to be applied over here. The nature is to give harsh implication on the assessee. The nature is not to give benefits to the assessee. Okay. Therefore, this section is not for the benefits of the assessee. I hope it is clear to all of you. Next point, how 144 is done? How does the AO compute the income without the returns, without the information? Is it on an ad hoc basis? The answer is no. It has to be on a scientific basis. and the computation has to be given to the assessee in a complete and detailed manner. It has to be based on the past year returns. It has to be based on the industry average. It cannot be an ad hoc computation. It has to be a detailed computation based on some logics and analysis. I hope it is clear to all of you. Now, coming to the next one, which is a small power given to the Joint Commissioner of Income Tax during the proceedings are pending. This power is only given, 144A power is only given when the proceedings are pending in front of the assessing officer. So who is the powerful person over here? Joint Commissioner. And who is the assessing officer over here? Assistant Commissioner, Deputy Commissioner, Income Tax Officer. Now sometime what happens during the assessment, sometimes the assessing officer does not know the effect of certain adjustments. So he can go and ask the Joint Commissioner. First point. Second thing, sometimes even assessee can come to Joint Commissioner and request to get interference into the assessment because the assessing officer is harassing the assessee. So the assessee can go to Joint Commissioner and request the Joint Commissioner to come into the picture. Sometimes the Joint Commissioner can suo motu also come into the picture. Therefore, in this section, the proceeding can be initiated by three people. First, the AO can tell the Joint Commissioner. Second, the assessee can tell Joint Commissioner. Third, the Joint Commissioner can himself come, and it will come and give a direction to the AO. Whatever direction it will give to the AO, that can be against assessee, that can be in favor of assessee, as the case may be. Now, whatever direction he will give to the AO is bound to follow that direction. AO cannot do anything. Plus, you can also not appeal against this direction. What you can do as an assessee, whatever he will tell the AO will ultimately follow that, because for AO it is binding. Once the AO will pass the final assessment order, after that if you want to appeal, you can go and appeal to Joint Commissioner appeal. Okay, you can go and appeal to whom? Joint Commissioner. You can go and appeal to whom? The higher authority, that is whichever is the higher authority in your case. Okay, that is CIT appeal, Joint Commissioner appeal, whatever it is. But you cannot directly appeal the directions of the Joint Commissioner over here. You have to go and appeal to whom? To the later on stage, when the final assessment will be done. At that time you can go and appeal. I hope it is clear to all of you. Now let's move on to the next part, that is the powers of certain very important income tax authority. Now before knowing the different powers of the income tax authority, we need to first of all understand what is income tax authority. Who all comes under income tax authority, and that is defined under section 116. And in that, the topmost income tax authority is CBDT. Nobody is beyond CBDT. Obviously, above CBDT, there is only one person, that is our beloved Finance Minister, Nirmala Sitharaman. Nobody is above her in Finance Ministry, at least in Income Tax Department at least. So CBDT is the topmost income tax authority who is actually into the day-to-day functioning. Then Chief Commissioner, Principal Chief Commissioner, then Commissioner, Principal Commissioner, and then CIT appeal is also there. Now one more authority has been added by Finance Act 2023, and that is called as Joint Commissioner appeal. Very recently, last year they have added. Now all those people who are there in this box, they are all assessing officers. The rank 1 assessing officer is Joint Commissioner, who handles only big cases. Day-to-day assessments, most of the assessments are done by these three people, AC, DC and ITO, who are rank 2 and rank 1 assessing officer. Joint Commissioner is also assessing officer. Sometimes it is not an assessing officer. Okay, I hope it is clear to all of you. Now let's talk about the different powers of the income tax authority one by one. The very first power is one of the most dangerous powers of the income tax law. If you don't comply with this power, then there is a direct effect that you may be served with what? A search and seizure warrant, and there can be raid in your office, in your house, etc. if you don't comply with section 131. That is the power of issuing summon. The income tax authority, including the Joint Commissioner, has the power to issue summon. This power is also there with the black money authority, black money law authority, and it is also there with the board for advance ruling authority, which is called as BFAR, authority for advance ruling. So this power is there at three places. So all the three places I have mentioned over here. Now coming to the income tax department, why they will issue summon, what they want? They will issue summon for four things. First, to discover something, to inspect something, they may issue summon. Second, they want to enforce your attendance. They want your attendance in the income tax department. For that purpose, they may issue summon. Third, they want to produce your books of accounts and documents, because you are not giving them documents, books of accounts on time. So they are issuing a summon to you, so that you are getting fear, you are getting scared, and you are giving all those documents and information to you. Fourth and the last point is a slightly technical point. They want to issue commission. That's the reason they are giving you summon. So what do I mean by issuing commission? For example, I stay in Mumbai. Now I want to get attendance of a person who stays in Chennai. Now a Mumbai income tax authority cannot directly send a summon to a Chennai person. They cannot send, because there is a jurisdiction under income tax law to whom you can send a summon. But I want that person to present in front of me, because that person is very important for me for the case. So for that purpose, I have to request the Chennai Income Tax Department that there is a person who stays in Chennai. I want that person to be in Mumbai in the next 1 week. So I have to request the Chennai Income Tax Department. Chennai Income Tax Department will send the summon to whom? Will send the summon to the person who is a resident of Chennai, and accordingly will come to Mumbai. This entire process is called as the process of issuing commission. This process is called as process of issuing commission. I hope it is clear to all of you. Now the summon can be issued to anybody. To anybody. There is no need for proceedings should be pending, then only summon can be issued. There is nothing like that. A summon can be issued even if no proceedings are pending. Further, if you want to send summon outside India, that is, if you want to send a summon to ask some information from Vijay Mallya in London, then first of all, you should have a DTAA with UK, first of all. And second, the summon can only be issued by an authority not below the rank of Assistant Commissioner. At least Assistant Commissioner or an authority above that can issue summon outside India. Within India, all income tax authority have the power. Outside India, the authority is slightly higher. I hope it is clear to all of you. Okay. Now coming to the next section, section 131, subsection 3. Impounding of books of accounts. What do I mean by impounding of books of accounts? Impounding of books of accounts means to take the books of accounts in custody. Can the income tax department take your books of accounts in custody? If yes, for how many days? Yes, income tax department may impound and retain your books of accounts for such period as they think fit. For as much time as they want, they can take the books of accounts in their custody. But to certain lower authority, there is a restriction. If the authority is assessing officer or additional director, deputy director, okay, then in that case the category has to fulfill some condition. By default, the income tax authority may impound the books of account for as many days as they think fit. But for assessing officer and certain other small authorities, they have to fulfill two conditions. They cannot impound the books of accounts without recording the reasons. And if they want to impound the books of accounts for more than 15 days, then they have to take an approval of Chief Commissioner and Commissioner. Otherwise, they cannot impound the books of accounts. It is not possible for these small authorities. Coming to the next section, which is a very important power with the assessing officer, with the joint commissioner, with the deputy commissioner, so on and so forth. One of the most useful, one of the most commonly used section under the income tax law is section 133, which is called as power to call for certain information. The department may call for certain information. Which information? First of all, we will see who all have the power to call for the information. The power is given with assessing officer, the power is given with CIT appeal, the power is given with joint commissioner appeal, deputy commissioner appeal and joint commissioner. Now let's talk about which all information they can call for. First information, they can send a information notice. They can send a notice to a firm and they can ask for the information of all the partners. They can ask for the names of the partners, address of the partners, their respective share of profit. They can send a notice to the HUF regarding the name and address of the respective persons who are the members of the family. They can send a notice to trustee and ask in which all trust you are trustee. They can send a notice to guardian and ask and for which all person you are guardian. They can send a notice to agent and ask for which all person you are working like an agent. Then they can randomly send notice to any assessee and ask to give an information regarding to all those people to whom I am paying rent, commission, interest. For example, they can send a notice to me and ask me to who all I am paying rent, to who all I am paying commission, to who all I am paying interest, so that to the people whom I am paying that the commission, rent or interest, whether those respective people are showing that as their income or not. They are trying to cross verify with the payer. Then they can send the notice to dealer, broker, agent. For what? For getting the details of the stock exchange and the commodity exchange. To give a statement of all the people who are purchasing the shares, selling the shares in your stock exchange or commodity exchange. Then they can send the notice to any person including banking company. Last point is a generalized point which may be useful for any proceeding or inquiry. Now all these proceedings, this entire section has also become faceless and it is covered under section 135A. Please keep this section in your mind because it will be useful in section 147 later on while doing income escaping assessment. So this 133 has come under the scheme of faceless collection of information under section 135A. 135A has 3 to 4 different sections which are cumulatively covered under 135A and all of them will be done faceless. Nothing will be what? Physical now. Similarly, next section 133B, power to collect information. If you are not giving the information on calling of information, they will come to your place and collect the information. Who will come to my place? Income tax authority will come to my place. Where they will come? They will come to your building. They will enter your place, your building during the working hours only. Which building? My house? No. Only business and profession place. They will not come to your house. So the income tax authority during working hours, they will enter your business or profession building. And they will tell the proprietor, they will ask the proprietor, they will ask the employee, they will ask other persons to give certain information which may be useful. which will be useful for the income tax department. Yes, in this section, they only have the authority to collect information. They cannot collect any books of accounts, documents, stock, cash, nothing can be taken. Only intangible things like information can be taken. Nothing tangible, including books of accounts, documents, nothing can be taken by them. And even this will be done faceless now by the department under 135A faceless scheme. Third section, 133C. What is 133C? Here in this section, the department has some information about you, but they want to just verify whether it is correct or not. So for that purpose, this notice is sent to verify the information. So for that purpose, the department will issue a notice to identify that whether the information which is there with them, is it useful for them under any proceeding or not. This is just a question of what? A verification of the information. Even this will be done faceless under 135A. Even this will be done faceless. Nothing has to be done face to face now. You don't have to be present in front of the department. You don't have to go travel to the income tax department these days. You have to be at your home and reply to them. They will send you a notice online. Now coming to the most important power of this chapter, that is power of survey. So what is power of survey? A survey is a surprise visit given by the income tax department. Suddenly they will come to your place and they will ask for your books of accounts, documents, cash, stock. You have to give them all of them. They will check whether you are accounting properly or not. Sometimes they also come survey for what? In your weddings also, in your events also. Sometimes they also come survey for what? To check your TDS and TCS compliance also. So survey can be done for multiple reasons. Now listen carefully. First of all, we need to identify who has the power to do survey. The power to do survey is with certain income tax authority. Now who are those income tax authority? It's a long list. Principal Commissioner, Principal Commissioner, Commissioner, Principal Director, Director, Joint Commissioner, Joint Director, Additional Director, Deputy Director, Assessing Officer and Tax Recovery Officer. All these people have absolute power to do survey. Now there are certain small level, lower level authorities also to whom the government has given certain preliminary powers, not extreme powers. These people in point number A have extreme powers. In point number B, people have some preliminary power. Who are covered in point number B? Inspector of income tax. They are only allowed to inspect books of accounts or other documents, place marks of identification, make copies, record statement from any person. Such clerical work they are supposed to do. They are not supposed to do any authoritative work. Authoritative work will be done by the people mentioned in point number A. Now whether you are mentioned in point number A, point number B, all of them have to take an approval from these four authorities. Principal Director General, Principal Chief Commissioner or Chief Commissioner as the case may be. Without taking an approval, entire survey will be considered to be invalid. So whether you are in point number A or point number B, you have to take an approval from these four, either of the four authorities which are mentioned below. I hope it is clear to all of you. Okay. Now let's go ahead. Where they will enter in case of survey. They will enter your business place or profession place, and now even charitable activity place they can enter. So they can enter your business, profession or even charitable trust. They can enter to charitable purpose also. Charitable trust also. When they will enter only after sunrise they will come. They will not come at 4 AM in the morning. Not possible. Only after sunrise but before sunset. They will enter. For entering there is a time. Only after sunrise but before sunset. But there is a condition over here that if your business hours is in night, if your business hours are in night, then they can enter even after sunset. Suppose if your office is opening at 8 PM in the evening and it is getting closed at 4 AM in the morning, then there is no sunrise at that time. Yes or no? Therefore, at that time they can enter because the business hours is in night. I hope it is clear to all of you. So again, I am saying where they will enter your business place, profession place or charitable activity place. But if your books of accounts are kept at home or other documents are kept at home, they can do survey at your home also. So not necessarily they can only do survey at your business and profession place or charitable activity place. But if you are keeping your books of accounts and documents and other information at home, then they can do survey at your home also. Whom they will catch after the survey is done? They will catch the proprietor, they will catch the employee or other person, and they will ask for books of accounts, they will ask for cash, stock, other valuable article, they will ask for such useful information which is necessary. Then they also have the power to do survey for compliance of TDS and TCS under 133A subsection 2A. So if they feel that the assessee is not complying with what? TDS and TCS provision, they can do survey under 133A subsection 2A to check the compliance of TDS, whether the assessee is deducting TDS properly or not, whether the assessee is paying TDS properly or not, whether the assessee is filing TDS and TCS returns properly or not. They can do survey for this also. That power is also there with them. Then what is the other the preliminary power? Now these powers are generally there with the second authority, that lower level authority. Inspectors and all will do this. That is, they will place marks of identification, make copies of the books, impound books of account. They have the power to impound books of account, make list of cash, stock, other valuable article, record the statement. Now most of the powers will be exercised by this category B authority, that is the Inspector of Income Tax. Okay, I hope it is clear. Now in survey, can they take your books of accounts and documents? Yes, they can take your books of accounts and documents in survey, but in survey also they cannot take your valuable article. They cannot take your cash. They cannot take your stock. They cannot take your valuable article. Yes, books of accounts and documents they can take. They cannot take other things. I hope it is clear to all of you. Now, can the survey be done in event ceremony also? Yes, depending upon the nature and the scale of the event. If the event is very big, the scale is very big, if there is a lot of interest of the revenue, crores of rupees are involved, then the survey can be done. In case of survey can be done in case of event, ceremony, weddings, etc. also, functions also. Now, if you don't cooperate in survey, then the department will send you a summon notice under 130(31). And if you don't cooperate in summon also, then I have told you earlier, non-cooperation of summon lead to what? Authorization of search and seizure. They may do search and seizure against you. I hope it is clear to all of you. Is it clear? Please tell me. Now let's go ahead with the next power, which is a very small power, which is given under section 134, power to inspect registrar of companies. I am an income tax authority. I want to just inspect your registrar of companies, who are your shareholders, who are your debenture holders, which of the assets are mortgaged, etc., etc. I want to check that. Can I do that? Yes, all of them now can be done again faceless only. You don't have to be physically present. This is also covered under 135A, faceless collection of information scheme. Now, who has the power? The AO has power, Joint Commissioner has power, Joint Commissioner appeal has power, CIT appeal has power, or any other person who is subordinate to him. Okay, subordinate to him can also go for this. Who has been given authority by these people. Now they can take copies of what? Registrar. They can inspect registrar of members, debenture holders, mortgages of any company, or of any entry in such register. This will also be done what? This will also be done faceless nowadays. Now coming to the next section, which is one of the most important section of this chapter, that is provisional attachment of any property. Very, very, very important. It has come so many times in the examination in the form of a theory question. Provisional attachment of any property. Now what do I mean by provisional attachment? First of all, what is the meaning of provisional attachment? Meaning of provisional attachment means the department will attach your property. It means you cannot sell the property now. You don't have the right to sell the property. You can use the property, but you cannot sell it. Now when they will attach the property? They will attach the property during the pendency of the assessment proceeding. Whenever any assessment proceeding is pending, they may attach your property for securing the interest of revenue of the department, so that the assessee should not sell the property and then later on say, I don't have money to pay the tax. So that's the reason the government will what? Government will attach your property. Similarly, only during assessment proceedings the department can attach your property, and during only one penalty proceeding they can attach property, not all penalty proceeding. Which is that one penalty proceeding? Under section 271 AAD, that too there is a monetary restriction only if the penalty amount exceeds how much? 2 crore rupees. So in case of assessment, there is no restriction on amount, there is no restriction of nature of assessment, whether it is 143 or 144 or 147 or search and seizure assessment. In case of all assessment, the AO can what? AO can attach your property. But in case of penalty, there is only one section where he can attach your property, that is what? That is your 271 AD, that too if the penalty exceeds 2 crore rupees. Now this will be done, provisional attachment can be done only with approval of higher authority, principal commissioner, chief commissioner, principal commissioner, etc., principal director general. You have to take approval from these either of the 8 authorities. Okay, or plus sorry, this is valid for how many months? This is valid for a period of 6 months from the date of order. If the AO has passed a provisional attachment today, then it is valid for how many days? It is valid for 6 months. After 6 months it is vacated. Can this be extended? Yes, this can be extended, but not beyond 2 years or 60 days after the date of completion, whichever is earlier. So maximum 2 days, or if the assessment is completed even after that, then 60 days from the date of assessment, whichever is later, not earlier, whichever is later, they have the power to extend that particular provisional attachment. So first you have time for 2 years. You can extend up to 2 years. But if the assessment is completed after 2 years, then you have 60 days from the date of assessment, and whichever is later, till that date you can extend the provisional attachment. Now, can the assessee tell the department, that please release my property. I am ready to give you a guarantee of that much amount. Suppose the department has attached your property of 5 crore rupees. Now you want that property. Can assessee say to the department that release that property of 5 crore, I will give you bank guarantee of 5 crore. Yes, you can say that. Now, assessee can alternatively furnish a bank guarantee to the AO, and the AO shall in such cases revoke the order for provisional attachment within 15 days of the guarantee. So once you give the guarantee, within 15 days, the AO will remove the provisional attachment power, and then you can sell your property as you want. Ultimately, the department wants security. Now, either they will get the security through provisional attachment, and if you are giving a bank guarantee, then that is also an equal security. That is also sufficient. But remember, the bank guarantee has to be given only through a scheduled bank. Other banks' bank guarantee they will not accept. They will only accept a scheduled bank guarantee. Now, this provisional attachment concept will also come once again in the concept of search and seizure. Now, certain small powers are there. One by one, I will tell you what are the powers of CBDT. CBDT has lot of powers which are given under section 119 of the income tax law. What all powers are there with CBDT? CBDT has power to issue orders, it has power to issue instruction, it has power to issue circular to its subordinates, and it's binding on the subordinate. Always remember, CBDT circular is never binding on the assessee. It is always binding on whom? It is always binding on the income tax department. It is not binding on assessee. If I want to challenge, I can go to the court and file a writ petition against the circular. It is not binding on the assessee, but it is binding on that income tax department. Further, point number 2 says that CBDT is not empowered to issue any order which will tell the department that how to work in a particular manner, how to do assessment. Don't issue circular for all those things. They know how to do it. Okay. Further, they cannot interfere with the CIT appeal or JC appeal in exercise of its function. They cannot interfere with CIT appeal and JC appeal that you should do like this, you should do the assessment, you should do the appeal like this, you should hear the appeal like this, you should pass the order like this. Don't get into all those things. CBDT cannot issue orders and instruction for day-to-day activities. Okay. Further, CBDT has the power to relax certain provisions of the Income Tax Act in order to remove certain difficulties. Like a lot of times they extend the due date of the income tax return. That is one of the way to relax the provisions of the income tax law. Further, CBDT also has the power to pass a general and special order. They have the power to pass a general and special order other than what CIT appeal and Joint Commission appeal authorizing any income tax authority. I am CBDT. I have I have an authority to pass a special order or a general order to give lot of exemptions to assessee, to give deductions to the assessee, to carry forward loss, to carry forward refund. Remember, just some time before in the provisions of 139(3) we have seen CBDT has given one instruction, one circular for what? For condonement in the delay of filing of return in case of loss return, and you can make an application and you can condone your delay for how many years? Up to 5 years you can file the return and you can carry forward the loss. You can also claim your refund. So all those powers are coming from where? All those powers are coming from here only. Now next, some small case laws are there. First case law, very important case law. CBDT does not have the power to amend the law through a circular. If they want to amend the law, they cannot issue a circular and amend the law. Then the entire purpose of parliamentary process is of no use then. If you want to amend the law, go to the parliament and change the law. Take the approval of all the members of parliament, change the law. You cannot change the law sitting at the CBDT's office. It is not allowed through a circular. I hope it is clear to all of you. Further, if there is a genuine reason, CBDT has the power to allow filing of return or carry forward of losses beyond beyond the time limit. If it is beyond the control of the assessee and because of genuine reason of assessee is not able to file the return, or if the assessee is not able to claim the loss on time, then the CBDT has the power to extend that particular thing for that assessee. Now coming to one last thing over here before we move ahead with our third assessment, that is 147, and that is protective assessment. Now what is protective assessment? First of all, there is no section for protective assessment. It's not section based, it's a concept based. Suppose there are two brothers who are fighting between one property. Now the department does not know this property belongs to whom. This property belongs to younger brother or elder brother. Department does not know this. Then how will the department decide that? In that case, the department will do a protective assessment. Will do assessment in the hands of both the person. The assessment will be done, but the tax will not be recovered from both of them. Tax will be recovered from either of them, but the assessment will be done on both of them. This is generally applicable if there is a litigation between two parties in civil court, or if there is a benami transaction about which nobody is aware that this transaction is done by whom. Mr. X has done or Mr. Y has done. There is no validity of the transaction done by one person. So therefore, in that case, if there is no absolute clarity about the transaction or no absolute clarity about the ownership of the property, CBDT will do assessment on both the person and then later on the tax will be recovered from either of the two person. I hope it is clear to all of you. Now let's move on to the next part, and that is the biggest part, one of the most important assessment for our examination, and that is section 147, which is income escaping assessment. and there are a lot of amendments over here as per the Finance Act number 2, 2024. Now, first of all, the provisions of income escaping assessments are given under section 147. Let's see the bare act first. Let's see the basic section first. What does the charging section has to say? Now, when this section is applicable? This section is applicable if you have escaped some income in earlier years. Whether an assessment was done earlier or it was not done earlier, it doesn't matter. If you have escaped income in the last 3, 4, 5, 6 years, then the department, then the AO has the power to reopen your assessment for earlier years under section 147. So let's see the bare act first, the basic charging section of section 147, and then we will go ahead into the depth of this particular section. If any income which has escaped assessment for any AY, so if the income which is supposed to be taxed, it was not getting taxed earlier, it was not taxed earlier because it was escaped by you, then the AO may, subject to 148 to 153, then the AO has to fulfill section 148 to 153. Remember, if the AO wants to charge income under 147, he has to fulfill the conditions mentioned under section 148 to 153. He cannot directly charge provisions of 147. He cannot directly assess your income under 147, ignoring the provisions of 148 to 153. He has to fulfill the provisions of 148 to 153 if he wants to charge the income tax under 147. So if any income has escaped assessment, then the AO has to first of all fulfill 148 to 153, and then he will assess or reassess. Assess means when he is assessing for the first time. Reassess means if that income was earlier assessed and now he is assessing for the second time because it was not properly assessed in the first time. And he can also assess any other income subsequently noticed during the course of the assessment proceeding. So when this proceeding will be initiated, at that time he might find some new income also which you have not shown earlier. So if he is finding some any other income which he noticed subsequently during the course of the proceeding, the AO has the power to charge that income also under section 147, and then he will recompute your income, recompute your loss, recompute your depreciation allowance and any other allowance as the case may be. So the ultimate objective of this section is, you have escaped income earlier, now the AO has the power, the assessing officer has the power to assess or reassess your income of earlier years in the current year, but subject to 148 to 153. Plus he also has the power to assess any other income if he notices subsequently during the course of the proceeding. Now the big question comes over here is, income can escape because of what? Income can escape because of whom? So income can escape because of two reasons. First, income can escape because of assessee's default. It can escape because of assessee's mistake. If it is escape because the assessee has hidden the income, assessee is a thief. He is hiding the income. He is escaping the income. Then he will be liable for section 147 assessment. He will be liable for tax, penalty and interest. All of them will be charged on him. But sometimes the income can also escape because of subsequent development in the law. Now, this we need to understand properly. This is something which is a new concept which is coming for the first time in our income tax so far. What is subsequent development of law? Subsequent development of law means, suppose there is a Supreme Court judgment which came today in my friend's case that this expenditure is disallowed. But 5 years back in my case, the assessing officer has allowed me that expenditure. Now my AO can take the advantage of my friend's judgment which is given by Supreme Court and say that the Supreme Court has given a subsequent development in the law. Supreme Court has given a subsequent law, subsequent judgment that can also be applied in my case, and he can reopen my case, 5-year-old case, and he can disallow that expenditure. This is known as subsequent development in law. Now subsequent development in law can happen because of the High Court or Supreme Court judgments, or it can also happen because of retrospective amendments in the law. But in case of subsequent development in law, it is not your mistake. Therefore, the department will do 147 assessment on you, will take tax on you, but no penalty and interest will be charged on you. Don't worry about it. In case of subsequent development in law, penalty and interest will not be charged on you. I hope it is clear to all of you. Now, so coming back to the original section, section 147. Section 147 is subject to 148 to 153. AO cannot assess income or reassess income under 147 unless and until he is fulfilling the conditions mentioned in what? Section 148 to 153. Therefore, what all things he is supposed to fulfill? He has to fulfill 148, 149, 150, 151, 152, 153. He has to fulfill all these conditions. So step by step, now we are going to talk about all the sections one by one. There has been a lot of changes in this from 1st September 2024. Earlier what used to happen, the search and seizure cases were also covered in 147, but now from 1st September 2024 onwards, the search and seizure cases are covered under separate assessment known as block assessment, which we are going to see after this. So now the search and seizure cases are not covered in 147. Those are covered as a separate assessment under 158, BA, BC, BD, etc. under the block assessment concept. It is not covered here. So AO has to fulfill some conditions. What is the first thing that A has to fulfill? So before making assessment under 147, AO has to do an inquiry. Inquiry under which section? Inquiry under 148A. It is a kind of opportunity of being heard given to the assessee. And if the results in the inquiry are positive, that yes, assessee has escaped the income, then the AO will go ahead and will give the copy of the order of the inquiry, and then the AO will tell the assessee to file the return under this section. And maximum time given to file the return is 3 months from the end of the month in which such notice is issued. So step by step you need to understand. So if the AO wants to do assessment under 147, he has to do an inquiry under 148A. He has to give an opportunity of being heard under 148A. After giving an inquiry, if he is satisfied that the assessee has escaped income, then he will issue a notice under 148, that is this section, and tell the assessee to file the return within the period specified in the notice, but maximum 3 months, not more than 3 months. Okay? This is the first thing that you have to keep it in mind. Sir, what is done in the inquiry, that we will see in the next page on the next section, 148A. Okay, but I have given you the synopsis. Inquiry means it's a kind of opportunity of being heard given to the assessee. Now, before issuing the notice, no notice should be issued unless the AO should have some information. Now, otherwise, why the hell he will send a notice unnecessarily? He should have some information now that the assessee has escaped income. So AO cannot issue a notice under 148 and even under 148A. Both the notice cannot be issued unless there is an information with the AO. This is a technical sentence. You have to keep it in mind. The AO cannot issue notice unless there is an information with the AO which suggests that income chargeable to tax has escaped assessment in case of the assessee. So unless and until the AO has a proof that income escapement has happened, the AO cannot issue notice under 148 or 148A. Okay, I hope it is clear to all of you. Step by step we have to go. We are not in a hurry. Even though it's a revision video, I will try to do it very comprehensively with you all. Next point. If the AO has got an information and notified under section 135A, if the AO has got an information from 135A source, then no notice can be issued without prior approval of the specified authority. So if the information is obtained from 135A, remember 135A we have done earlier in the chapter of income tax authority, collection of information, calling of information, power to inspect registrar of companies, power to verify information collected. So all those informations were collected. If on the basis of that AO wants to issue notice under 148, he has to take an approval from higher authority. Then the assessee will file the return and it will be considered as return furnished under 139. Okay. And if the assessee does not file the return on time, then it shall not be deemed to be written under 139, and then the AO will do best judgment against assessee. All those things will happen. Now till here what is important, you have to keep it in mind. The flow of this section is very important over here. If the AO wants to do assessment under 147, he has to do first inquiry under 148A. After that he will send a notice under 148 to file the return. But before sending the notice, he should have information which suggests that income chargeable to tax has escaped assessment. Now, what do I mean by this phrase, information which suggests that income chargeable to tax has escaped assessment? What do I mean by this phrase? This phrase is defined under income tax law. When can the AO say that he has an information which suggests that assessee has escaped income? So for that, the government has given 6 points. If any of the 6 points are happening, it is assumed that you have escaped income. First, if the AO has information and the information he has got from the risk management strategy formulated by the CBDT from time to time. What is this risk management strategy? I have told you everything in the class with the help of example. If the AO gets information from SFT, Statement of Financial Transaction, or if the AO gets information from Annual Information System, that it can be called as a risk management strategy formulated by the board. Or if the AO gets an information from an audit objection of the auditor, if the AO gets information from the auditor's report, or if the AO gets information from DTAA under different countries, or if the AO gets information from the scheme notified under 135A, from collection of information, from calling of information, from registrar of members, etc., which is covered under 135A, or if the AO has got information from the High Court or Supreme Court or Tribunal's order. If a High Court order says that this income is taxable, AO can initiate 147 against you. He can issue notice under 148 against you. He can do inquiry under section 148A against you. Or if the AO has got an information from a survey, other than TDS and TCS survey. With the help by doing a TDS and TCS survey, AO cannot initiate 147, but other than TCS and TDS survey, he can do 147 on or after 1st September 2024. Before also he was supposed to do, but before even survey and search and seizure both were covered. Up to 31st August, survey was also covered, search and seizure was also covered, but now search and seizure has been removed from here. Only survey is there because search and seizure there is a separate assessment. I hope it is clear to all of you. So these are the 6 reasons which you can say that AO has information which suggests that income chargeable to taxes escaped assessment. But before sending the notice under 148, I have told you earlier only, the AO has to first send an inquiry notice to the assessee. And what is inquiry notice which is given under 148A? It is an opportunity of being heard given to the assessee to show cause as to why 148 notice should not be issued against him. It's a show cause why a 148 notice should not be issued against you. Then the assessee will reply. Reply within which time? Within the time specified in the notice. Earlier the time limit was 7 days to 30 days, but now the time limit has been changed to it is specified in the notice. It is not 7 days to 30 days. And then the AO will pass an order with the prior approval of specified authority that whether it is a fit case for 148 or not. Then the AO will decide whether actually 148 is required or not. If the assessee explains everything properly, then 148 should not be issued. The matter should be closed here itself. But if the assessee does not explain anything properly, then the AO will initiate with 148 and then 147 assessment will start. Last but not least, this inquiry is not required in case of 135A faceless collection of information. So there are 6 reasons because of which the AO can what? Send you notice under 148. But if the reason is this, see on the board, if the reason is this, then the AO need not have to do inquiry also under 135A. 135A inquiry is not required in this case. I hope it is clear to all of you. Okay. So this is what section 148 and 148A is all about. Now coming to what? Now coming to 149. What is 149? Again, a very important section. Again, an important amendment has been made in this particular section in change of time limits. This section talks about, section 149 talks about by when the department can send you notice under 148 and inquiry notice under 148A. What is the time limit to send this notice? So there are 2 cases. One is normal case, one is special case. For normal case, the notice under 148A, the time limit is different. The notice under 148, the time limit is different. 148A is inquiry notice, 148 is your return filing notice. So what is the time limit? Let me tell you. Say this is previous year 24-25. I will explain you with the help of example. And this is assessment year 25-26. So this notice 148A notice has to be sent within 3 years from the end of the relevant assessment year. So therefore 148A notice has to be sent by 31st of March 2029. It has to be sent, it has to be issued by the department by 31st of March 2029. Check it please. Notice under 148A has to be sent within 3 years from the end of the relevant assessment year. What about 148? For 148 take 3 months extra. If you take 3 months extra, it is 30th June 2029. Check 3 years and 3 months. So 148 has to be issued within 3 years. 148A has to be issued within 3 years from the end of relevant AY, and 148 has to be issued within 3 years and 3 months from the end of relevant AY. Are you clear? And in special cases, this 3 years will become 5 years and 5 years and 3 months. In special cases, the 3 years will become what? 5 years and 5 years and 3 months. Therefore, this 31st March 2029 will become 31st March 2031 and 30th June 2029 will become 30th June 2031. And who will come under special case? In special case, you will come if the AO has proof in its possession that you have an asset or you have incurred an expenditure or you have done a transaction or you have passed an entries where it is proved that your escaped income is likely to be 50 lakh rupees or more. If your escaped income is likely to be 50 lakh rupees or more, the AO can issue you notice beyond 3 years but up to 5 years, not beyond 5 years. Beyond 5 years, notice is not possible under income tax law in today's time. I hope it is clear to all of you. I hope it is clear to all of you. Okay. So, very simple. 3 years, 3 years, 3 months. 5 years, 5 years, 3 months. 5 years is applicable. Beyond 3 years, you can send notice only if the escaped income is likely to be 50 lakh rupees or more. Otherwise, you cannot send. Okay. Now, who are the sanctioning authority? If you remember, there was a requirement of some sanctioning authority over here. If you remember, specified authority, you have to take sanction before sending the notice. So, who are the sanctioning authority for the purpose of 148 and 148A? It is defined over here. It is additional commissioner, additional director, joint commissioner, joint director, as the case may be. These 4 authorities are the sanctioning authority in today's time under the income tax law for the purpose of section 148 and 148A. Okay. Next, I'll talk about 152(1) first and then I will go to 152(2). What will be the tax rate, sir? The tax rate, I'll tell you very simply. the tax rate will be of the respective years. The tax rate will not be of today's. So if the income is escape for 22-23 and if the assessment is done for 22-23, the tax rate of 22-23 will be applicable here and not the tax rate of 24-25. I hope it is clear to all of you. Okay. Now what is this concept of dropping of assessment? Let me explain you this with the help of example. Suppose earlier the AO has done a wrong disallowance of say 10 lakh rupees. If the AO has done a wrong disallowance of 10 lakh rupees, suppose earlier in previous year, say in previous year 22-23. Now you could have easily appealed against this wrong disallowance. If the AO is doing wrong disallowance, you could have appealed, but I have not filed any appeal, any rectification, any revision, no remedy was taken by me. I paid tax on this 10 lakh rupees. Now today, the AO is finding some escaped income of this year, some escaped income of 7 lakh rupees of this year. Okay. How much? See, pay attention on the numbers. The entire game is of numbers. So how much disallowance, wrong disallowance is done by AO? It is in 22-23, it is of 10 lakh rupees. And now today the AO is finding some escaped income of 10 lakh rupees for PY 22-23. Now the law says that if your wrong disallowance is more than the escaped income, the AO has to drop this assessment. Okay. The AO cannot do this assessment under section 147. He has to drop as per 152 subsection 2. But if the wrong disallowance would have been 10 lakh and your escape income would have been 17 lakh, then AO would have not dropped, because in that case the wrong disallowance is less and the escaped income is more. Therefore the AO will continue with 147. So the rule is very simple. If the wrong disallowance is more and escaped income is less, the assessment will be dropped under 147 as per section 152 subsection 2. I hope it is clear to all of you. Okay. Now one last thing over here is time limit for completion of assessment. See, for time limit we are going to see separately a separate chapter in your book that is dedicated to time limits of various provisions under the income tax law. But as and when an important section comes, it is my duty to address you the time limit of that particular provision also. So first I will tell you the time limit to complete a regular assessment and a best judgment assessment. The time limit to complete a regular and best judgment assessment is 12 months from the end of relevant AY. So whatever is the relevant AY, take 12 months from the end of that. Suppose previous year 24-25, assessment year 25-26. When 12 months from the end of this year will end, that is end on 31st of March 2027. So this is the time by which you should complete assessment. Yes, if your matter has been referred to transfer pricing officer, you will get 1 year extra. Therefore, in that case, this will become 2028. I hope it is clear to all of you. So the time limit to complete regular and best judgment assessment, both the assessment it is 31st March 2027. If the matter is referred to TPO, 31st March 2028. Now, what is the time limit to complete? 147. The time limit to complete income escaping assessment is, listen carefully, the time limit to complete income escaping assessment is 12 months from the end of the financial year in which the notice under 148 is served. So whenever the notice under 148, that is the return filing notice under this chapter, is served on you, 12 months from the end of that financial year. Plus, you will get again 12 months extra if the matter is referred to transfer pricing officer. I hope it is clear to all of you. Okay. Now let's go ahead with the next part, that is search and seizure. Now we have to divide this entire thing into two parts now. First is search and seizure, and then search and seizure assessment, which is absolutely a new assessment. Search and seizure is not new. Search and seizure is there since long time. But the search and seizure is reintroduced. Search and seizure assessment is reintroduced by Finance Act 2024. Earlier it was there till 2003, known as block assessment. So they have reintroduced the block assessment from 1st September 2024. So divide the entire discussion into two parts. First do search and seizure and then do search and seizure assessment. So let's talk about first search and seizure. What is search and seizure? Search and seizure is nothing but a raid which is done by the income tax department at your office, at your place, at your home, at your godown, at any other place. Okay. Now to do this search and seizure, the assessing officer should have warrant. And to get a warrant, the assessing officer has to go to the higher authority. Now who are the higher authorities to whom the government has given the power to give a warrant? So there are 8 authorities to whom the government has given the power to what? To give warrant. Out of which 4 authorities have absolute power to give warrant, and the rest of the 4 authorities have to take approval from CBDT. Now who are the 4 authorities who have absolute power to issue warrant? Those are called as Director General, Director, Chief Commissioner, Commissioner. You can check over here. Director General, Director, Chief Commissioner, Commissioner. And the 4 authorities to whom the power is given, but it is not absolute power. They have to take approval from the higher authority, that is from CBDT, that is additional director, additional commissioner, joint director, joint commissioner. So in all there are 8 authorities, out of which 4 have absolute power, 4 have to take approval from CBDT. Okay, now all the discussions over here are divided into small parts, so I will discuss all of them into small parts. The next part, when can search and seizure be authorized? What do I mean by this? That what is the reason behind authorizing a search and seizure? Suppose if I am an officer, if I go to these authorities, these 8 authorities, and tell them that I want to do search and seizure, I want a warrant, you have to prove them something, no? You have to prove them that the assessee has done something wrong. So the income tax authority should have information in their possession. Should have information in their possession, and because of that, they should have reason to believe. Reason to believe means hardcore evidence. They should not be of the opinion. They should have reason to believe. They should have hardcore evidence. What? That the assessee has not complied with, or he will not comply with 131 and 142(1). So I have told you earlier also, if you do not comply with a summon under 131, there can be a search and seizure warrant against you. Or if you don't comply with 142(1) notice, there can be a search and seizure against you. And one more big reason because of which search and seizure can be there against you, because you are in possession of undisclosed items. You are in possession of undisclosed article, money, bullion, jewelry, other valuable article. All of them are what? Undisclosed. So if you are in possession of undisclosed articles, undisclosed money, undisclosed bullion, jewelry, other valuable article, in short black money, there can be search and seizure warrant issued against you. Now, before issuing this warrant, the department should have reason to believe. Now, the question is, can they share this reason to believe with the assessee later on? The answer is no. The reason to believe or reason to suspect should not be shared with any person or any authority, or even it should not be shared with any tribunal also. It should not be disclosed with any person. So reason to suspect or reason to believe should not be disclosed with any person. Why? Because otherwise that would lead to what? Lead to danger to assessee's life. Danger to the informer's life, not to the assessee's life. Suppose the informer has told the department that Mr. XYZ, that Mr. Palani has escaped this much income. Okay. Now, later on Mr. Palani come to know that this is an informer. Mr. Palani will go and shoot that particular informer. Yes or no? Therefore, informing, giving the name of the informer is not good. It is bad in law. Therefore, the government has said that you should not inform, you should not disclose the name of the informers. Okay, so giving reason to believe is not allowed under the income tax law. Now coming to the discussion, next part by part we have to discuss. Now the moment the assessing officer will get the warrant, he will be now called as an authorized officer. Remember, the words has to be written very carefully in assessment procedure. Assessment procedure is a technical part where your language of the law has to be very clear. You cannot replace the words. Okay, reason to believe cannot be replaced with opinion. Opinion cannot be replaced with reason to believe. Authorized cannot be replaced with assessing officer. Assessing officer cannot be replaced with authorized officer. That will show the examiner lack of your knowledge. Okay, so you need to be very careful conceptually what is required where. Now, once the officer will get the warrant, he will be called as now not assessing officer but authorized officer. Authorized to do what? Authorized to do search and seizure. Now what he will do? First of all, he will enter and search any building, any place, any vessel, any vehicle, any aircraft. He will search everywhere where he suspects that books of accounts, documents, etc., money, etc. is kept. Wherever he suspects, he will search all of them. Not only building, he can enter your office also, he can enter your house also, he can enter your godown also, he can enter your car also, he can enter your aircraft also, vessel also, ship also, everywhere. Plus, if the keys are not available, he can break open the door, lock, safe, almari, etc. He can do all those things. He can break open the lock if keys are not available. Then he will search all the people who are going inside the building. He will search all the people who are coming out of the building. He will search all the people who are already inside the building. He will search all of them. Then he will tell the respective person to give the information of electronic record to help the authorized officer regarding opening of the books of accounts. Suppose if the books of accounts or documents are password protected, etc., then he will tell the assessee that you have to give the password, etc., and open the documents and give it to us. If you don't facilitate him, if you don't help him, you will be liable for a prosecution of 2 years in this case. Then he will seize your books of accounts, etc., documents, money, bullion, jewelry, everything he can seize except stock in trade. He cannot seize your stock in trade. Seizure of stock in trade is not allowed under this section also. And last but not least, he will place marks of identification, make copies of books of accounts, the same power which was there in survey also. Okay, so these are some of the powers which are there with the officer. Now, there is one press release of CBDT which tells us very important factor. It is important to all of us, all the citizens of this country. It is very important press release that how much gold jewelry we can keep with us without explaining the source. Without explaining the source, how much we can keep? By explaining the source, you can keep 10,000 kg also. But without explaining the source, how much you can keep? That is, for married lady, it is 500 gram. For unmarried lady, it is 250 gram. You need not have to explain from where it has come. And for male member, it is 100 grams. This much you can keep without explaining the source also. Even if it does not match your income, it's okay. Nobody will raise any question. Now, depending upon the customs and tradition of the family, you can even keep a higher quantity. That depends upon your family. Is a very rich family, etc. Then 500 gram is nothing. It's a very small peanut for you. Okay. Suppose you are Ambani families or you are Tatas or Birlas, then in that case 500 gram gold is something which is very simple, very small amount. So for them, the quantity can even be higher. I hope it is clear to all of you. Let's move on to the next concept, which is called as deemed or constructive seizure. Now, what do I mean by deemed or constructive seizure? Deemed seizure means where the officer is not able to do actual seizure. Why? Because of some reason. Because the goods which he wants to seize, it is very voluminous. It is very weight. The nature is dangerous. There is a chemical composition in that. It's chemically dangerous. Therefore, I am not able to seize the things. So if the officer is not able to seize the things because it is very voluminous, because it has heavy weight, because of the nature, because of its dangerous nature, because of its chemical composition, then the officer can do deemed seizure. How he will do deemed seizure? He will tell the assessee that it is deemed to be seized in your premise only. You cannot use it. You cannot sell it without my permission. And it is deemed to be seizure. Again, deemed seizure cannot apply to stock in trade. It cannot apply to stock in trade. It is not possible. Okay. I hope it is clear. Next one. Order of restraint. Sir, what do you mean by order of restraint? Order of restraint is given under section 132 subsection 3. Now let me explain you the meaning of this term order of restraint, how it exactly works in search and seizure. Suppose the officer is coming to my home and searching my bedroom because he has a warrant to search my place and the warrant is on me. Now he is searching my bedroom, he did not find anything. Now he wants to search my brother's bedroom also. Warrant is not on my brother, warrant is on me. Now he wants to search my brother's bedroom also because we live in the same house. So now he is coming to my brother's bedroom also. And now in the brother's bedroom he is getting some gold jewelry, etc. So he asked my brother, that this belongs to whom? My brother said that this belongs to him only. Now he asked my brother that show me the proof. My brother showed the proof also. Since the officer is not convinced, so he is telling that I am not taking away the gold. You can keep the gold with you only, but I am passing an order of restraint against this gold for a period of 60 days. For 60 days, my brother is restrained from what? Selling this particular gold to any person, and after 60 days he can do that. Such orders are called as what? Check it please. Order of restraint, where the officer is restraining you to use that, to sell that for any other purpose. For some period, that is maximum 60 days. He cannot do beyond 60 days. Okay. I hope it is clear to all of you. Let's move on to the next point, that is presumption in the course of search and seizure. What are the presumptions in the course of search and seizure? The moment the officer will enter your building, he has to make some presumptions in his mind and come. That is, if he finds anything in any person's hand, he will say that it belongs to such person. If he finds anything in any person's hand, he will say that it belongs to such person. Similarly, if he finds that any books of account, then he has to believe that the content of the books of accounts are true. If it is not true, then it is the burden of proof. The onus is on the assessing officer to prove that it is not correct. The onus is not on the assessee to prove that it is not correct. The onus is on the assessing officer. He has to prove that it is correct or not correct. That you have to prove. Assessee is not going to prove all those things. Further, if he sees any document in which there is some sign, there is some handwriting, there is some stamp, there is some attestation, then it will be assumed that it is done by the person who is in possession of that. So whomsoever is holding that document, he will say that you have signed, you have written, you have done the attestation, you have done the stamping, everything is done by you. If you have not done, then you have to tell us who has done it. Okay. I hope it is clear to all of you. So these are the three assumptions. Very important question. A lot of time they ask this in the examination. That what are the presumptions in the course of search and seizure. Okay, so you have to write these 3 points in the answer. Now the next issue. Small issues are there, but all of them are extremely important because search and seizure has become a very important for this exam because there has been a separate assessment for search and seizure from this year onwards. Now the next point is, pay attention, 132 subsection 9A. What is 132 subsection 9A? Suppose the officer is coming to my place to do search and seizure, and in my place he finds some jewelry which belongs to my friend. Now what is the duty of my officer? The duty of my officer is to hand over that jewelry to my friend's assessing officer within 60 days from the completion of the search. Check it please. Moral of the story, my officer cannot do anything with the jewelry of my friend. He has to hand over that to my friend's assessing officer, and then my friend's assessing officer will do what? That we will see in the next part. Don't worry in the amendment part. Next, can the department provisionally attach your property during search and seizure? Yes, the department has the power to provisionally attach your property during the search or within 60 days from the date of search. In the interest of the revenue, they may provisionally attach your property with higher approval of Principal Director General or Principal Director or Director as the case may be. So during the search or within 60 days from the date of search, they can provisionally attach your property to protect the interest of the revenue, and this provisional attachment will be effective for a period of how many months? Period of 6 months. So it will be valid for a period of how many months? Period of 6 months. Next question. Can the department refer the matter? Can the AO refer the matter to valuation officer? Yes, because so much wealth has been accumulated by the department. So much bullion, jewelry, painting, lot of things have been accumulated by the department. Now the department wants to know the valuation of this particular asset. What is the worth of this asset? So they are not expert in valuation, so they have to take in help of valuation officer. So they can refer the matter to a valuation officer or to any other person, entity, registered valuer approved by the Commissioner of Income Tax, etc. And the valuation officer will give the certificate within 60 days from the date of receipt of such reference. So they will give the certificate, they will give the valuation report within how many days? Within 60 days. Generally under 142A, valuation officer takes 6 months, but here 6 months will be too much. So in 60 days he has to revert back and give the valuation certificate. Okay, I hope it is clear to all of you. Now to understand this point number 9, we need to understand first point number 10, and then we will come back to point number 9. What is point number 10? Point number 10 is 132A, which will come again and again now, which is power to requisition books of accounts, documents, bullion, money, jewelry, etc. Now what is this section? Suppose the assessing officer wants to do a search and seizure, but he knows that even if we do search and seizure, nothing will be found in the assessee's place. Why? Because already the customs people have done the search, already the FEMA people have done the search, already the GST people have done the search, already the prevention of money laundering people have done the search. Therefore, it doesn't make sense to do search and seizure under income tax law because already the search has happened under other law. So in that case, what is the duty of the assessing officer under 132A? In that case, the Director General, Director, etc. will authorize the assessing officer, and now your assessing officer will be called as requisitioning officer. So now the Director General and Director will authorize the assessing officer. Now he will be called as what? Not authorized officer. He will be called as requisitioning officer. He will make a request to the officers of the authority. He will make a request to the customs authority. He will make a request to the FEMA authority. He will make a request to the GST authority that if you don't want, if you no longer require the books of accounts, documents, money, bullion, jewelry, then you can hand over that to us, and that will also be called as what? That will also be called as a seizure, and then the department will do what? Search and seizure assessment against you. So there are two ways in which the seizure can be done. First, directly the officer will seize from you. Second, the officer will indirectly seize from the other authorities. Okay. Now, in both the cases, when can we say the search and seizure is completed? In case of search, the date of last Panchnama drawn. Whenever the last Panchnama is drawn, what is Panchnama, sir? When the search is completed, the department put a stamp on the paper, take the signature of the assessee, and then goes away. That date will be called as the date of completion of search. But in case the department has not directly done the search, but the department has done requisition, then in that case, whenever the officer has received the books of accounts or asset, that date will be called as date of completion of search under the income tax law. I hope it is clear to all of you. Now, next point, point number 11. For the purpose of search, can the authorized officer take the help of a police officer? Yes, the authorized officer can take the help of a police officer or any other approved officer of central government, or he can also take the help of both the persons also, okay? Or he can also take a help of any person or entity as approved to assist him. So if he wants help, he can take the help of different parts of the department. That is approved by central government or approved as a central government officer or police officer or both of them. Okay. Now, next. What is the period of retention of books of accounts and documents? Only books of accounts and documents. I'm not talking about money, bullion, jewelry, valuable article, assets. I'm not talking about monetary assets. I'm talking about paper, books. The period of retention of books of accounts. All the books which are seized by the officer during the search and seizure has to be retained and it has to be returned back to the assessee within 30 days from the completion of assessment. When? Within 30 days from the date of completion of assessment, whether it is a regular or best judgment or 147 or search and seizure. Now this time limit is applicable to all the assessment, not only to search. This is a general section applicable to all the assessment, not only to search. So once the assessment is completed, you have to return the books within 30 days. But if you want to keep beyond that also, beyond 30 days also, then you have to take a prior permission from these respective authorities which are highlighted over here. You can check over here: Principal Chief Commissioner, Principal Director General, Principal Commissioner, Principal Director of Income Tax or Director of Income Tax, as the case may be. Okay, you have to take approval from beyond 30 days. If you want to keep, you can take approval from these people and keep it with you. Okay, that is your choice. Now, one last thing over here, and then we will move ahead with then search and seizure will be completed. Then we will start with the search and seizure assessment part. What is the last thing over here? 132B, application of seized or requisitioned asset. Now, whatever assets the officer has seized from you. Suppose the assessee has taken cash of 5 crore rupees, bullion of 5 crore rupees, total 10 crore. Now, where he will use that? Where he will recover which all things out of it. So he will deal that in the following manner. He will recover the following things out of the asset seized. First, he will recover the existing liability under the Income Tax Act, whatever is the existing demand raised under the Income Tax Act or Wealth Tax Act or Gift Tax Act. Now one more law has been added by Finance Act 2024, that is black money law. Existing liability under the black money law will also be recovered from here only. Are you clear or not? From the seized assets under search and seizure. Secondly, the assessment is going to happen now in the next chapter, that is block assessment. Whatever liability will come over there, that will also be recovered from here, and then penalty and interest will also be recovered from here. Most importantly, luckily, advance tax will not be treated as an existing liability. If there is an advance tax of current year, that will not be recovered from here, that you have to pay separately from your pocket. That will not be adjusted from here. I hope it is clear to all of you. Now, one relaxation that the government is giving you over here is pay absolute attention on this relaxation. This is a very important relaxation to all the SSC. Suppose today the search and seizure is happening and the department is taking away some assets from me and I am not able to explain the nature and the source of that asset because I am into a panic mode. I am not ready to explain that because I am not able to understand how should I explain that. So I am very scared. So you can tell the department to take away that asset because right now you are not able to explain that. But now you have a period of 30 days from the end of the month in which the asset is seized. You have 30 days from the end of this month. You can go and tell the assessee the nature and the source of the asset and explain the nature and the source of the asset, from where this asset has come, whether this asset has come from the explained source, you have already paid tax on this. If you have explained everything, then the department will return your assets. But only after recovering the existing liability. They will recover the existing liability and the remaining portion of the assets will be given back to you with the prior approval of Chief Commissioner or Commissioner, as the case may be. So again, a very important proviso it is. Very important. This has come in the examination lot of times. You can see a lot of question in the study material also, which we have done it in class with respect to this particular proviso. So if you are not able to explain the source and the nature during the search, you can explain within 30 days from the end of the month in which the search is. The asset was seized, and then you can come to the officer, explain the nature and source. They will take the existing liability and they will return you back the remaining asset. And then how many days they will return me the assets, sir? They will return you the assets within 120 days from the completion of search. Maximum 120 days from the completion of the search, they will return you all the assets. Now, last but not least in this chapter, sir, if the department is seizing money and if the department is seizing jewelry also, they will recover the tax first from where? It's very obvious. First, they will recover the tax from money. And if money is not sufficient, then they will sell your assets, they will discharge your assets, sell your assets and take their liability. First, they will not recover the assets. First, they will not recover the tax from assets. First, they will recover the tax from money. And then they will start to recover the tax from what? Sale of your assets. And then after that also, if some assets are left, then the department will return you. And now if the department does not return you on time, then they will pay you an interest of what? 0.5% per month or part thereof. So this is what the search and seizure proceeding is all about. Now after search and seizure, let's go ahead with the search and seizure assessment called as block assessment, reintroduced by Finance Act 2024. Long back it was discontinued in 2023. Now for that the government has made a separate chapter, chapter 14B, covering from section 158B to 158BI, called as the scheme of block assessment. And this is applicable only if the search and seizure or requisition, as the case may be, is initiated on or after 1st September 2024. So if the search and seizure is conducted till 31st of August 2024, then the old section 147 will be taking care of it. But if it is conducted on or after 1st September 2024, then the new provision will be applicable. So that's what the first question over here is. What is the date of applicability of the new scheme, which I have already told you. If the search and seizure is conducted on or after 1st September 2024, or if the requisition of the asset, where the assets is with some other authority, you are requesting them to get it in your custody. If the requisition has happened on or after 1st September 2024, then the AO will proceed to assess or reassess your total income of a block period, the most important word over here, of a block period, as per section 158B to 158BI. So therefore, all the people whose search are conducted on or after 1st September, date is very important. You have to pay attention on the date. On or after 1st September, if your search is conducted, then the AO will assess your income as per this assessment of the block period. Now you will ask me, what do I mean by a block period? Earlier, what used to happen in case of search and seizure, separate assessments were done for separate years. Now separate assessment will not be done. A block of 6 years, you will be done assessment under 1 year itself. The block of 6 years means 6 years assessment will be done together in one shot. 6 separate assessments, 6 separate order will not be passed. Everything will be done in one single shot. So first of all, we need to understand what do I mean by the term block period. Okay. For that, block period includes two things. It's cover a period of 6 plus 1 year. 6 plus 1 is equal to block period. So how to identify this 6 plus 1? It is very simple. In whichever year search is initiated, suppose the search is initiated on 30th September 2024. Very simple to identify block period. And the search is completed on 5th October 2024. So the search is initiated in which year? It is initiated in 24-25. Exclude this year and take the last 6 years. Exclude the year of search and take the last 6 years. That will be part of block period. So therefore the block period will be 18 previous year 18-19, 19-20, previous year 18-19, 19-20, 20-21, 21-22, 22-23 and 23-24. This is the last 6 years excluding the year of search. So the block period includes this 6 years assessment will be done together now in one single shot by the assessing of plus 1, sir. What is plus 1? Plus 1 is the current year period. That is the period from 1st April in the year in which the search was conducted and till the date on which the search was completed. This period will also be considered to be part of block period. When the AO will do assessment of last 6 years, the AO will also do assessment of this 6 months and 5 days in the block period only. He will do the assessment of this 6 months and 5 days also in the block period only. I hope it is clear to all of you. So the block period contains two parts. Last 6 years and the current year up from 1st April up to the date of completion of the search. I hope it is clear to all of you. What do you mean by the term block period? Okay. Now, once we have defined the term block period, now what is the next step? The AO will send you a notice, will issue a notice to furnish a return for block period. So he will send, just like 147, where the AO used to send you a notice under 148. Here the AO will send you a notice over here to file a return for block period within such period as may be prescribed in the notice. The notice will specify number of days. In how many days I am supposed to file the return? 10 days, 20 days, 30 days, 40 days. But maximum he will allow you how many days? He will allow you 60 days, not more than that. So he will tell you to file the return for the block period. That is for those 6 years and from 1st April till 5th October in our example. And then after that, when you file the return on time, if you file the return on time, then the AO will send you a scrutiny notice and will start the assessment. This return cannot be revised. So you have to be very careful. You cannot revise this return under 139.5. Further, this return will not be processed under 143.1 also. This will not be processed under 143.1. It is not allowed to process this return under 143.1. I hope it is clear. Step by step, try to understand everything. Sir, what is the status of completed assessment? Now you have to be very careful. Very careful with what I am trying to say now, because this is going to be linked with further concepts later on. What is the date in my example on which the search was initiated? It was initiated on 30th September 2024. So on that date, you have to check the status of all the years of block period. What is the status of 18-19? What is the status of 19-20, 20-21, 21-22, 22-23, 23-24? And if any assessment is pending for this year, if any assessments are pending. It might be possible on the date of initiation of search, that is on 30th September 2024 for previous year 18-19, 147 is pending. It is still continuing. It is not completed. 147 is pending for 19-20 also. 147 is pending for 2021 also. 143 subsection 3 is pending for 23-24. It is possible that the assessments are pending for earlier year. So the law says that on the date of initiation of search, all the assessment shall abate. Abate means it will stop and the assessment will be done as per the new section, that is the block assessment, and all your regular assessment, income escaping assessment, best judgment assessment, any kind of assessment which are already which is already pending on the date of initiation of search will all abate, will all stop, and till the time block assessment is complete, no further assessment or reassessment shall be taken place under any other provision. I hope it is clear to all of you. Is it clear? So everything will be conducted under this section only. So what about if some income has been found under the earlier assessment? All of them, if income has been found under 143 earlier, if it has been discovered by the AO under 144 earlier or 147 earlier, all of them will be subsumed while computing the total income of the block period, and everything will be assessed over here under the block period. Everything will be assessed under the block period. I hope it is clear to all of you. Is it clear? Sir, what about the assessments which are already completed prior to the date of initiation of search? So any income declared in the return of income, in this would be subsumed in what? In the total income. So how to compute total income, that we will see after some time. But as of now, try to understand one thing. What is the status on the date of initiation of search? If any assessment is pending for the block period, all those assessment will abate, will stop, will pause, will stop, will pause. They cannot do assessment under the respective section. They have to be considered under the total income of the block period, and you have to come under the block assessment. Okay. Next concept, subsequent search. What do I mean by subsequent search? Suppose, listen carefully, all of them have to be understood with the help of a story. Even in revision video, I cannot run through the things. You will not understand anything. And if you don't understand anything, what is the use of making a revision video without explaining the things to my students? So listen carefully, what do I mean by subsequent search? Subsequent search means what? Search is going on, search completed, step by step understand, then assessment started. Now the assessment is going on, assessment is pending. Which assessment is pending? Block assessment. And in between block assessment, there is a second search on the SSE. Is it possible? The block assessment is going on, and in between there is a second search. So the question is, what will happen with the assessment of the second search? The government says that in such cases, the department has to first complete the first assessment and then they will initiate the second assessment. Check it please. First, they will complete the first assessment. Where any assessment of this provision is pending, where any assessment of this chapter is pending, and there is a subsequent search, then the assessment shall be duly completed first. First complete the old assessment, and thereafter the subsequent search assessment shall be started. I hope it is clear to all of you. Okay. Now what does total income will include? Total income of block period will include what? Total income of block period will include the total income of the assessee, including the undisclosed income of the assessee of any money, bullion, jewelry, other valuable article, or any expenditure which has been escaped by the assessee, or any documents, any transaction, any entry, any books of accounts which has not been disclosed, any expense which has been wrongly claimed, any deduction which has been wrongly claimed, any allowance which has been wrongly claimed. All of them will form part of what? Will form part of block assessment. And how to compute total income, that is altogether a different calculation. For that, government has made a separate section. We will talk about that at the end of this section. So the AO will compute the total income of the block period by including all the incomes of those 6 years plus that almost half year and 5 days. That is from 1st April to 30th September, 5th October. Okay. Now let's go to the next point. Next point is also very dangerous. Very dangerous. It is linked to something which I have just told you. Listen carefully. Search has completed. Again, a flow of discussion is very important. See, I have learned all those things in my life when I was doing my CA. Similarly, I have also learned all those things while teaching from 2012 to 2021. This assessment was there in a different form. And then they changed in 2021, and then they again changed in 2024 to block assessment. So I have seen all those things, and practically also I have seen all these things. So listen to the flow in which I am trying to say you all. Listen. There is a search which is happening. Search completed. After that, the moment search completed, search and seizure assessment will start. But the moment search and seizure assessment will start, all the old assessments pending will get abate. Will get abate means will stop. And now the entire assessment will be done on the basis of search and seizure block assessment. Now search and seizure block assessment completed. Assessee is not satisfied. Assessee went to appeal. Matter went till ITAT. And the ITAT said that the entire proceeding of search and seizure is illegal because the warrant itself was wrong. The ITAT is saying that warrant was wrong. Now, if the ITAT is saying the warrant is wrong, the entire search and seizure proceeding is invalid. So, in that case, the government has given one power to itself that the proceedings which were getting which was getting abated earlier, now it will revive. These proceedings which were getting abated earlier, which has got abated earlier, now will get revived if the search and seizure proceedings are annulled by any court or any tribunal. Are you able to understand or not? If any proceeding initiated under this chapter has been annulled, then notwithstanding anything contained, any assessment or reassessment which has abated shall revive from the date of receipt of the order of such annulment by the principal commissioner or commissioner. So whenever the date of annulment, whenever the order of annulment will be received by the principal commissioner or commissioner, from that date onwards, there will be a revival of what? The pending assessments of 2018-19 to 2023-24. I hope it is clear to all of you. This is what the dangerous provisions of revival of income tax law is all about. So all these things I have also made questions in my question bank. You can go and check my question bank also. I have made questions, special 2, very special exhaustive question which can come in the exam. ICI material does not have a single question on search and seizure assessment. I have made 2 special questions on search and seizure assessment which is there in our question bank. Now, what do I mean by undisclosed income? Because ultimately what AO is found out is undisclosed income. The undisclosed income falling within the block period shall be computed as per the Act on the basis of evidence as a result of search or survey in consequence of search, etc., etc. So whatever search the AO has done, in that search the AO would have found a lot of incomes, that will be called as undisclosed income. Or if later on some survey will be done on the assessee, on that survey whatever income will be found, that will be considered to be what? Undisclosed income. So all those undisclosed income will be taken care of under the block proceedings while computing the total income. Okay. Now what is the status of other person? Now who is this other person? This other person is my friend. Remember in the discussion of search and seizure I have told you, the AO has come to my place to do search and seizure. And he found some bullion, jewelry, etc. of my friend. What is the duty and responsibility of the assessing officer? The duty and responsibility of the assessing officer in such case is to hand over that money, bullion, jewelry to my friend's assessing officer. So the AO will hand over that to my friend's assessing officer. Now the question is what my friend's assessing officer will do. My friend's assessing officer will also do block assessment of my friend because of me. Henceforth nobody will keep anything at my place. Because if somebody has found, something has been found at my place, my assessing officer will give that to your assessing officer, and your assessing officer is also obligated to follow the provisions of 158B to BI. He will send you a notice, he will tell you to find the return for the block period, and he will do your block assessment, so on and so forth. Check it please, very dangerous provision, very dangerous provision. I hope it is clear to all of you. Now, what is the time limit to complete block assessment? So for 2 people, we need to tell the time limit. One is in case of me and one in case of my friend. For me, what is the time limit? It is 12 months from the end of the month in which the search was completed. The last authorization for 132, that means search was completed. So 12 months from the end of the month in which the search was completed, the AO has to complete the assessment. If the matter has been referred to TPO, then it will be extended by another 12 months. Okay. The way extra 12 months is given in case of regular and income escaping assessment also. But in case of my friend, the period of 12 months will be counted from the end of the month in which the notice under 158BC in pursuance of 158BD was issued to such other person. So whenever 158BC has been issued in pursuance of 158BD, whenever my friend will get a notice from his assessing officer, you have to count 12 months from the end of that month. That AO will have an time to complete the assessment. Even he will get extra 12 months if there is a reference to TPO. Okay. I hope it is clear to all of you. Is it clear? Now, next point is with respect to transfer pricing assessees, where there is an international transaction or there is a specified domestic transaction. Listen carefully, and if the AO finds something in relation to international transaction or specified domestic transaction from the period 1st April 2024 to 5th October 2024, if AO finds something with respect to that assessee has escaped some income with respect to international transaction or specified domestic transaction, and it pertains to the current year, not to the last 6 years, but to the current year, then that should not be taken in the block period. For that, separate assessment should be done under the different provisions of the income tax law, that is like 143 subsection 3, 144 subsection 144 best judgment assessment. Listen carefully. If there is any evidence found in the search and seizure that the income pertains to the current year, 7th year, and if it is a transfer pricing assessee, or if it is a domestic transfer pricing assessee, then the current year income of the transfer pricing will not be assessed under the block period. It will be assessed as per the normal provisions of the income tax law. That is what this provision wants to tell us. I hope it is clear to all of you. Now, once you are covered under block assessment, what is the tax rate? The tax rate is flat 60% tax rate, flat 60. Whatever will be the income computed by the AO under the block assessment, on that 60% tax you have to pay. What about surcharge? The government can impose surcharge also, but as of now there is no surcharge referred by the government. They have not specified any surcharge as of now, but they have made a provision, but in the Finance Act they have not mentioned anything about the surcharge. So as of now only 60% tax will be imposed on the assessee. Okay. What about penalty and interest? No penalty under 270A will be imposed over here. There is a separate penalty which is imposed under this section, which we are going to talk now, 158 BFA. There is no interest which is imposed under 234 ABC over here. 234 ABC are not applicable over here. 270A is also not applicable over here. I hope it is clear to all of you. Now let's talk about the separate interest which is covered over here and the separate penalty also which is covered over here. What is the interest covered over here? The interest is for not filing the return. Which return? The return under this chapter, and late filing of return. If you late file the return over here, or if you don't file the return over here, you will be liable for an interest of 1.5% per month or part thereof. On 1.5% per month or part thereof will be on how much amount? On what amount? On tax on undisclosed income. Whatever tax on undisclosed income will be computed, on that 1.5% per month or part thereof interest will be imposed on you. From when the interest will be imposed? Interest will be imposed from the date of expiry, on a day immediately following the day of expiry of filing of return. So whenever the AO has told you to file the return, from the next day itself the interest will be imposed till the date of assessment, till the date of completion of assessment. So what is the rate of interest? 1.5% per month or part thereof. What is the amount on which it will be imposed? Tax on undisclosed income. What is the period? After the expiry of the date mentioned in the notice till the date of assessment. Okay. What about penalty? What about penalty? The penalty will be imposed under 158 BFA subsection 2, not 270A. How much penalty will be imposed? The AO will impose 50% penalty again on tax payable on undisclosed income. So whatever is tax payable on undisclosed income, on that 50% penalty will be imposed by the AO. But if you want to get saved from the penalty, you have to fulfill 4 conditions. If you fulfill 4 conditions, you will not only get saved from this penalty, but you will get saved from many other penalties as well. You will be getting saved from total 5 penalty if you fulfill 4 conditions. If you fulfill 4 conditions, which are those 4 conditions? I'll tell you. First of all, you will be saved from this 158 BFA subsection 2. You will be saved from 271 AAD also, 271D also, 271DA also, 271E also, if the following 4 conditions are fulfilled. First, you have to furnish the return as per 158 BC. As per this chapter, you have to furnish the return. Second, you have to pay the tax and furnish the payment, furnish the proof of payment of tax. You have to pay the tax and furnish the proof of payment of tax. And if you don't want to pay the tax, then you can tell the department that whatever assets you have seized, you can recover the tax from there. Whatever assets you have seized, you can recover the tax from there only. It is allowed to cease from, it is allowed to adjust from there. And the fourth, you should not file an appeal against that assessment part which is shown in the return. Not file appeal against the assessment of that part of income which is shown in the return. So you should not file an appeal against that part. You can file an appeal against other part, but which is shown under the return, you should not file an appeal against that part. But this concession is not applicable in certain cases. If the undisclosed income determined by the AO is greater than the return income disclosed in the return of income. So if the undisclosed income determined by the AO is 80 lakh rupees and you have disclosed in the return 50 lakh rupees, then on the differential amount the department has the authority to impose the penalty. So on 30 lakh rupees the department will impose penalty, then the benefit of this particular proviso is not available to you. Okay, I hope it is clear to all of you. Now certain other points which are very procedural in nature. Who are the authority competent to make assessment of block period? It means there are various authorities under income tax law now. Who has the authority to do block assessment? It has to be passed by an order. Order has to be passed by an AO not below the rank of deputy commissioner, assistant commissioner, deputy director or assistant director, as the case may be. This point is talking about what? Who will pass the block assessment order? So the block assessment order has to be passed by an AO not below the rank of these 4 people. Okay, then there has to be some prior approval which you have to take. When you have to take some prior approval requiring the search assessee to furnish the return of income. So to send the notice for return of income as well as to pass the order of assessment, to send the notice for return of income under this section as well as to pass the order of assessment, you have to take the approval from certain higher authorities. Who are those higher authorities? It is additional commissioner, additional director, joint commissioner and joint director. These are the 4 people who have been given the authority to what? who has been given the authority to what? Give approval for notice for the purpose of filing the return and also for the purpose of passing the order. The approval has to be taken from these people. Okay. Then the provisions of dispute resolution panel is not applicable in case of block assessment. What do I mean by this? That is, in case of dispute resolution panel is applicable for certain assessees under transfer pricing. What happens in that case? There are certain eligible assessees like non-residents or any other person in whose case the TPO has passed the prejudicial order. You can go to dispute resolution panel. The dispute resolution panel will listen your case. 3 commissioners will listen your case, and then whatever order they will pass, that will be binding on you. That will be binding on assessing officer also. Then you cannot raise any question on that. Okay. Then you can file an appeal later on. While the AO will give you an assessment order, you can file an appeal to ITAD directly. Therefore, that is not available in case of block assessment. In case of block assessment, you cannot go to DRC. Dispute resolution panel doors are closed for you. In case of DRP, in case of search and seizure assessment, the AO is not. Moral of the story, I'll tell you. The moral of the story is, in case of search and seizure assessment, the AO is not going to make any draft order. He will directly pass a final order with the approval of these authorities, and he will give you the order. You don't have an option to go to DRP. If you want to appeal, directly go and appeal to CIT appeal. Okay. I hope it is clear to all of you. Now, the next point talks about the assessment of the current year. Current year means from 1st April 2024 to 5th October 2024. What will happen with the assessment of this year? So, the undisclosed income will be covered in the block period. What about the income which is disclosed? Income which is voluntarily disclosed by the assessee in the current year. Why 60% tax should be imposed on that? It is very wrong. Therefore, apart from undisclosed income from 1st April to 5th October 2024, whatever income is other than undisclosed income, that income will be assessed as per the normal provisions of the income tax law. Check it please over here. Okay. Now let's talk about the most important point, that is what is the total income of the block period. How to compute the total income of the block period? For that, the government has given a long formula, unnecessary formula, waste of time, waste of money, waste of energy, waste of resources. They have given a formula where you have to add A plus B plus C plus D plus E. Okay, you have to add all these things. Then you have to reduce B plus C plus D. You have to reduce these 3 things. I don't understand. First you have to add these items, and then you have to reduce these 3 items. Then why the hell they have put these 3 items? They should have easily ignored these 2 points and just directly write A plus E is your total income of the block period. They have done unnecessarily time pass. I have already told you this in our batches, respective regular or fast track exam oriented batch. There is a lacuna in the law, there is a mistake in the law. I have told you in the class, but I am not getting into all those things today. It takes a lot of time to explain you the mistakes in the law. But as of now, I am explaining what is the position of the law. What is A? You have to add 5 items, you have to reduce 3 items. So 3 items which you are going to reduce is already added in the 5 items that you are going to add. So unnecessarily, effectively, there are only 2 items that we have to consider. In that also they have made a mistake. Let me show you how. First, you will add the total income disclosed in the return. Whatever you have disclosed in the return under this chapter, you have to include that. Then you have to include whatever is assessed earlier under 143, 144, 147, 153A. Okay. If the assessment is done earlier of 18, 19, 19, 20, 20, 21, 21, 20, you would have already paid tax on that. Okay. Include that also. Then you have to include total income declared in the return of income under 139 for which the assessment is not done earlier. There is a possibility that for 1920 the assessment was never done. For 2021 the assessment was never done. Take that also. Then you have to take the income of the current year. Income of the current year means from 1st April till 5th October, whatever you have earned, you have to take that, because for that the assessment was never done earlier. Okay. Then you have to take the undisclosed income determined by the AO. Okay. You have to take what? Undisclosed income determined by the AO. Then they realize that this is already subject to tax earlier, so you have to reduce that. B, this also you have declared earlier, so you should reduce that. This also you have shown yourself only in your books of account, so you should reduce that. So effectively, what is the formula? It is A plus E only, na? Why unnecessarily they are making it very dramatic? First add 5 times and then reduce 3 times. Unnecessarily they are doing all these hopeless things. 21 years back when the law was there, it was not like this. It was not that complicated. It was very straightforward. A plus E, that's it. Now they have put first 3 items and then reduce the same 3 items. Now in this also they have made a mistake. See what mistake they have made. When I say total income disclosed in the return of income, will this not include also those incomes on which I have already paid tax? Please tell me. Definitely. If you are telling me to disclose the income in the return under 158 BC, I will disclose the income of all the 7 years, na? 6 years plus half year, that is the 7th year half. half 7th year. So in this already there is an income which is included on which I would have paid tax. Then why I am again paying tax on that 60% unnecessarily? Why I am paying? So I have already put that this is a mistake in the formula given by the government. They have to change this formula. Very soon they will come with a circular or an amendment in Finance Act 2025 and they will change it. But for us, nothing will be applicable. For us, whatever mistake is there, you have to accept it as it is. And then you have to apply in the exam. You don't have any other option. Check it, please. Because the mistake is there. Lord, that's it. If you feel that it is not a mistake, comment below and tell me if it is not a mistake. One thing is very clear, when you say that disclose income in the return of income, then you will disclose all the incomes, whether you have paid tax earlier or not paid tax earlier. When you file a return, you have to disclose everything. And then whatever AO has found out that you had, on this you are imposing 30%, I have no issues in that. 60%, sorry. On this point number E, because this is disclosed, this is found out by the assessing officer. But why you are imposing 60% on all the incomes which are already included in the income earlier? Doesn't make sense. Now, sir, what about the losses, sir? Losses of prior to 18-19, sir, losses of prior to block period. What has to be done with that? See, whatever losses you have before the block period and UAD you have before the block period, you cannot set off against this income, and against undisclosed income losses cannot be set off, UAD cannot be set off. So the losses of 17-18, 16-17, 15-16, you can carry forward after the block period. Okay, you can carry forward after the block period for the remaining period. You can check it over here. You cannot set off against the block income. You cannot set off against this particular income, against this income, the losses of earlier years. You have to carry forward after the block period. You can carry forward for the remaining number of years. So this is what this great assessment is all about. And here we complete all the assessments. The objective of this video was to give you full English revision, comprehensive revision that you cannot get anywhere on the YouTube. Anyways, English revisions are hardly available on YouTube. Most of the teachers are only uploading what Hindi revisions. I am doing both for my South Indian students also. And I consider this as my duty to address you all also. All the things that are possible from my side. Whatever is possible from my side, I will do it for you all in full English. I will do. Then it doesn't matter how much time it takes. I will try to put the entire revision videos for you all, full English. I'll try to put the MCQ videos, past RTP, MTP compilation, latest RTP. I will do everything that is possible from my side. Okay. Your duty is to study well, is to watch this video as much time as possible, and as a token of appreciation, if you can do so, you can comment below what is your experience of learning this revision video from me. And one more thing, you can share this with as many students as you want, as you wish, so that our reach with South Indian students should increase. Because I want that if I am putting so much efforts, then every CA student who wants to learn direct tax in English should watch these videos. So take care all of you till then, study well. Bye all of you, see you soon with the next revision video. Bye.